Hello, 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 students. Hello, students. Am I audible? Please let me know once. Yes. Yes. Hello, students. In the morning session, there is a mistake in problem number 3A of MTP set 2. Observe carefully. So here is a small correction. Make a correction of it. Here they have given salaries. Here they have given salaries 1,35,000. 1,35,300, whereas salaries payable 14,700. Means this 1,35,300 includes 14,700 rupees. 14,700 rupees. You need not to add this 14,700 separately to the salaries. Hence 1,35,300 is shown directly on the debit side of P&L account, and 14,700 is shown on the liability side of balance sheet. Here is a small correction. At the same time, prepaid rent 1800, rent 25,800. Here what is our assumption is, here just they have given rent, means 18,000 prepaid rent already deducted from rent. 1800 is already deducted from rent, so that this 25,800 straight away we take it to the P&L account debit side, and prepaid rent we take it to the asset side of balance sheet. So what is the difference between this problem and RTP problem? Look at RTP problem once. Look at RTP problem once. In the RTP problem they said electricity expenses paid. Electricity expenses paid, and here electricity expenses payable. Electricity expenses paid means actually paid. Still payable how much? 20,000. When we take it to the P&L account, we take 40,000 plus 20,000, 60,000. And 20,000 again we show it on the liability side of balance sheet. Whereas in MTP2, here they simply said salaries. They did not mention whether salaries paid or not. Simply they have said salaries. So our assumption is salaries payable already adjusted. And here also they said simply rent. Our assumption is prepaid rent already deducted from rent. So it's a small mistake. Make a correction of it. Next, now in this session we start our discussion with the accounts from incomplete records. Accounts from incomplete records. Then after NPO, not for profit organization, right? So accounts from incomplete records, if you observe, based on the 3 attempts, sometimes they are giving a question on accounts from incomplete records for 5 marks, and sometimes they are giving for 8 marks or 10 marks. So anyway, we get 3 problems from all these 3 chapters, but we don't know for how many marks we get, but damn sure NPO we get for 10 marks. So here ICAI is giving choice, not choice. Sometimes they are giving 10 to 12 marks problem from final accounts, and sometimes they are giving a problem on incomplete. Is it clear? Right. Now we start our discussion with the types of problems we get in incomplete records. Types of problems which we get in incomplete records. This is incomplete records. What are the various types of problems we get from incomplete records? Observe carefully. Okay. Generally, we get two types of problems from incomplete records. One is preparation of statement of affairs, and calculation of profit. And second one is conversion method. Conversion method, what we do, we complete the incomplete information into complete information. From there we prepare financial statements, trading account, profit and loss account, and balance sheet. Sir, which type of problem we get in the exam, sir? We cannot say that. Sometimes they may ask statement of affairs method, sometimes they may ask conversion method. Hope you are following. Yes. Sir, what is the difference between final accounts of sole proprietorship and accounts from incomplete records? Final accounts of sole proprietorship, they give you trial balance. They are giving trial balance means they have followed accounting cycle. What is our accounting cycle? First we identify the transaction. Then after we record the transaction in journal. Then after posting, totaling, casting. From there we prepare trial balance. From trial balance we prepare financial statements, trading account, profit and loss account, and balance sheet. Unless you have trial balance, how can we prepare financial statements? It is not possible. So in final accounts of sole proprietorship, they have given trial balance means they have followed accounting cycle. They had proper recording. They have recorded all the transactions properly. But under incomplete records, here the businesses may not follow complete record system. What we have to do? But even though these small businesses would like to know how much profit they have earned and what is their financial position. In such a situation, what we do is we first collect the information from the proprietor. Based on the information which we have collected, first we record them in the books of accounts. This incomplete record we record as complete system. From there we prepare a trial balance. From trial balance we prepare financial statements. But in the examination they give you the incomplete information. You need not to prepare any trial balance, but you have to prepare financial statements. That is the challenge students are facing. If you have trial balance and adjustments, it is easy to prepare financial statements. But when incomplete information is given, from incomplete information you are being asked to prepare financial statements. Hope you are following, students. Yes. Now look at. First we see problems on statement of affairs. Thereafter we see problems on conversion method. Under statement of affairs, what we do is we collect the information about, generally to calculate profit or loss, which information we need? Income minus expenses. Which information we need? Income minus expenses. Okay, but here to collect all income information and expenses information from the proprietor, it becomes very difficult. Instead of collecting incomes and expenses, what we do is we collect assets and liabilities information. So actually we have learnt a small equation called assets is equal to liabilities plus capital. Na? Yes or no? The same formula we follow. We prepare statement of affairs at the beginning of the year, at the same time at the end of the year. If you prepare statement of affairs at the beginning of the year, we can come to know that opening capital. If you prepare statement of affairs at the end of the year, we come to know that closing capital. By comparing this closing capital and opening capital, we can calculate easily profit or loss of the business. This is the technique which we follow under statement of affairs method. Is it clear, students? So how do we prepare statement of affairs? Tell me. We collect the information of assets and liabilities. The difference between assets and liabilities is nothing but capital. If you prepare statement of affairs at the beginning of the year, then it is opening statement of affairs. If you prepare the statement of affairs at the end of the year, then it is called closing statement of affairs. Okay, now look at some problems we try to solve on this concept. Observe carefully. Very simple. Statement of affairs problems are very simple, students. But if you get conversion method problems, now that becomes little bit difficult. Yes. Look at illustration 3 first. Here, assets and liabilities of Mr. X as on 31st March 2021 and 31st March 2022 are as follows. They are giving information on 31st March 2021 opening, 31st March 2022 closing. Right? Look at one by one. So assets. This is the opening date. Asset. Okay. 1 lakh. Furniture 50,000. Inventory 1,20,000. Asset. Sundry debtors, we show it on the credit side. sorry, asset side of balance sheet, cash at bank, asset side of balance sheet. Next, cash in hand, asset side of balance sheet. After that, liabilities, loan, liability, sundry creditors, liability. If you draft this information on 31st March 2021, we get opening capital. We get opening capital. Look at how much opening capital we got, 2,41,200. At the same time, now come to information on 31st March 2022. What is the information on 31st March 2022? They said building. Yes, building 1 lakh. Building 1 lakh, and here they have given some adjustments. Look at, decided to depreciate building by 2.5% per annum. Means from this 1 lakh, now what we have to do is 1 lakh minus 2.5% depreciation, 2,500. Means what is the value of building on 31st March 2022? 97,500. 97,500. Thereafter, furniture depreciate by 10%. What is the furniture value here? The furniture value is 50,000. Depreciate 10%, 5,000. What is the new value of furniture? 45,000. 45,000. Okay. Next they said life insurance policy of the proprietor was matured. Okay, fine. Now next asset, look at inventory, 2,70,000 asset, sundry debtors, 90,000 asset, cash at bank, 85,000 asset. Next, cash in hand, 3,200 asset, and loan, liability 80,000, and sundry creditors 70,000 liability. So that we got here closing capital. We got here closing capital. Yes. Now try to observe here. We have a formula, that means in case of sole proprietorship, when we are preparing balance sheet, in case of sole proprietorship, when we are preparing balance sheet, we have followed here, we have taken opening capital plus additional capital plus interest on capital plus net profit. We have taken all these things now. Yes, sir. And from this, what we did, we have deducted drawings. We have deducted drawings minus any goods withdrawn minus life insurance premium paid, minus net loss. This is we followed in case of sole proprietorship final accounts to calculate capital. Now, after doing all these adjustments, what we got? We got closing capital. After doing all these adjustments, what we got? We got closing capital. Now, by using this, what we are going to do is all these adjustments now we do. After doing all these adjustments, now we are able to calculate net profit or net loss. Net profit or net loss. By comparing this opening capital and closing capital, now we are going to calculate net profit. So what is the formula for this? Simple. Net profit is equal to closing capital. Here the formula is reversed. Closing capital plus drawings. Closing capital plus drawings minus opening capital minus additional capital. Simple logic. Net profit is equal to closing capital plus drawings. Reverse. We can go from here. Reverse. Okay. Closing capital plus drawings minus opening capital minus additional capital minus interest on capital. All these things we have to deduct. The same logic we follow now. Look at here. See. Here closing capital is 4,40,700. Closing capital is 4,40,700. Less fresh capital introduced how much? 40,000. They said in the problem they have introduced fresh capital 40,000. Okay, and they have withdrawn 2,000 rupees per month. 2,000 rupees per month into 12 months, 24,000 they have withdrawn. Add 24,000. Add. How much amount we are getting? 4,24,700. From this deduct opening capital, or else we can do like this. How? 4,40,700 plus how much drawings here? 24,000 minus what is the opening capital? 2,40,200 plus 40,000 is closing capital. Sorry, additional capital. How much we get here? Calculate. 4,40,700 plus 24,000 minus 241,200 minus 40,000. How much we are getting here? 1,83,500. This is our net profit. This is our net profit. Observe carefully. Yes, whatever the technique we have followed, that means whatever the procedure we followed in case of final accounts of sole proprietorship for calculation closing capital, the same formula we are taking, just we are calculating net profit by using this simple equation. Okay, now let's look at illustration 5. This is very important, students. This is very important. Observe carefully. The income tax officer, on assessing the income of Sri Moti for the financial year 2020-21 and 21-22, 2 years information they are giving, feels that Sri Moti has not disclosed the full income. Here the income tax officer is thinking that Sri Moti, he has not disclosed full income. Okay, fine. He gives you the following particulars of assets and liabilities of Sri Moti as on 1st April 2020 and 1st April 2022. Observe here, 1st April 2020 and 1st April 2022 means 2 years. 2 years information they are giving. Now we have to prepare statement of affairs for 2 years. First observe 1/4/2020. What are the various assets we have? 25,500 asset. Inventory 56,000 asset. Sundry debtors asset 41,500. Land and building 1,90,000. Wife's jewelry 75,000. Okay, these are the assets we have. Now liabilities owing to Moti's brother, liability on the liability side, sundry creditors. By using this information, we can calculate opening capital. Opening capital on 1/4/2020. We can calculate. Now look at on this date, what are the various assets we have? Cash in hand, inventory asset, sundry debtors asset. Next, land and building asset, motor car asset, wife's jewelry asset. Right. Now liabilities. Loan to Moti's brothers. This is also asset. Loan given to Moti's brothers 20,000 and sundry creditors liability 55,000. By using this information, what we can calculate is closing capital on 31st March 2022 we can calculate. Here they have given 1/4/2022 information. This is opening on 1/4/2022, closing on 31st March 2022. So that we can calculate closing capital on 31st/3/2022. And by comparing these two capitals, we can calculate the income of Mr. Moti. Look at. Observe here. On 1/4/2024, total assets minus total liabilities. This is the opening capital. And on 1/4/2022, these are the total assets minus total liability. This is closing capital. Now tell me how much amount he has withdrawn. He has withdrawn for 2 years 4,000 per month. 4,000 per month. So 24 months. Here you have to take 24 months, not 1 month. Sorry, 1 year. 24 months we have to take. 24 into 4,000. How much? 96,000. Tell me what is the closing capital here? Closing capital 5,65,000. Closing capital is 5,65,000 plus how much amount withdrawn? 96,000. 96,000. Okay. Next, what is the opening capital? 3,13,000 minus 3,13,000. Now tell me what is his profit? 5,65,000 plus 96,000 minus 3,13,000. Actually, his profit is 3,48,000 for 2 years. His profit is 3,48,000 for 2 years. But how much profit he has disclosed? 1,05,000 for 2021 and 1,23,000 for 21-22. Means how much short profit he has disclosed? 1,05,000 minus 123. He has disclosed 1,20,000 rupees short profit. He has disclosed 1,20,000 rupees short profit. Yes or no, students? So this is your answer. How this problem is different from previous problem? Tell me how this problem is different from previous problem. In the previous problem we have just calculated what is his profit, but in illustration 5 we have calculated what is his profit for 2 years and this we compared with the profit which he has disclosed to the income tax officer, and we identified the difference of profit. We have identified the difference of profit. Yes, how much is the difference of profit? 1,25,000. So income tax officer contention is clear. What is that? Mr. Moti disclosed or suppressed his income. Yes, how much income? We have calculated how much it is, 1,20,000. This is how we calculate. We have calculated profit of the profit of the small businesses by following statement of affairs method. Statement of affairs method. Okay. Now we come to important method, that is conversion method. Under conversion method, what we have to do? Tell me. First, all the incomplete information we take, we complete that information. That means we record for every transaction double entry. We follow for each transaction double entry. Means we record that the transaction in journal, we post them into ledger, and we prepare trial balance. But in the examination problems, it is not possible to record all the entries, postings, preparation of trial balance. No, straight away, all these things we have to keep in mind. Okay, for this information, this is the entry I have to record. This is posted to so and so accounts, and these accounts are balanced. From these accounts, I prepare trial balance like this. From trial balance, straight away, I will go to the profit and trading account, profit and loss account, and the balance sheet. This is how we have to check. Okay, now, just a minute. Yes, when we are following conversion approach, what we have to do is first do one thing. Actually, preparation of financial statements means what? Trading account, profit and loss account, and balance sheet. But under this method, under incomplete records, what we have to do is, in addition to trading account, profit and loss account, and balance sheet, we have to do certain adjustments and compulsory adjustments. Compulsory adjustments. What are they, sir? Simple. Look at the first step. What we have to follow? Prepare the formats of the trading account, profit and loss account, and balance sheet. This is as usual. We draw these formats. Second one, prepare cash and bank summary. Sometimes they may not give opening balance of cash and banks or closing balance of cash and banks, or sometimes they give you some missing amounts. These missing amounts we can calculate by preparing cash and bank summary. Practically we prepare cash book na? Yes, the same cash book now we have to prepare as a working note. Next, prepare total debtors account. Why should we prepare debtors account? Why? Because sometimes they may not give opening balance of debtors. Sometimes they may not give closing balance of debtors. Sometimes the missing figure may be how much amount collected by debtors. To know that, this total debtors, practically we prepare debtors account na? Same approach we follow here. At the same time, bills receivable account also we have to prepare. There is a linkage between total debtors account and bills receivable account. We have to link between debtors and bills receivable. At the same time, total creditors and bills payable. Compulsorily, total debtors account, total creditors account we have to prepare. If there are some bills receivables and bills payable, then only we prepare bills receivable account and bills payable account. Otherwise, we ignore. But debtors, creditors account, cash and bank summary, compulsorily we prepare. Right. Next, prepare an opening statement of affairs. If opening capital is not given, I repeat, if opening capital is not given, then we prepare opening statement of affairs to know the opening capital. To prepare opening statement of affairs, we need the assets and liabilities information at the beginning of the year. Yes. So that information also we have to grab. Whatever we do from the given problem, what you have, they give you information, that information you have to convert into trading account, P&L account, and balance sheet. That's it. How you prepare, I don't mind, but I will give you the information. You convert that information into trading account, P&L account, and balance sheet. So here we have to utilize our techniques. Next, any other account if required. Suppose sometimes asset account may be required to know how much depreciation to be charged, or how much asset purchase, whether any asset is purchased during the year, or when any other asset is sold during the year, like this. So we have to prepare all these working notes. Is it clear, students? Yes. Now, to prepare debtors account, what you need to understand is, what are the probable transactions between business and debtors? What are the probable transactions between business and debtors? At the same time, to know how to prepare total creditors account, first of all, you should know what are the probable transactions between creditor and business. I repeat, what are the probable transactions between creditor and business? That you need to understand. Okay, students. Now look at, here we see the probable transactions between total creditors, creditors and bills payable account. Look at, first of all, how the relationship between creditors and business exists with the credit sales. With the credit sales, from my point, suppose I sold goods to you. From my point of view, you are my debtor. From your point of view, I am your creditor. So goods sold or goods purchased, right? So which information they get? Opening balance of creditors they give you. Next, goods purchased on credit. For this, generally, what is the entry we record? Purchases account debit to creditor account posting by purchases. Next, bills accepted. What is the entry for bills accepted? Creditor account debit to bills payable account. So creditor account debit side, bills payable account credit side. Next, bills payable dishonored. We record the reversal entry. What is that? Bills payable account debit to creditor account. This also we post into creditors account as bills payable account. Next, cash paid to the creditors during the year. Cash paid to the creditors during the year. Entry, creditors account debit to cash or bank account. This entry we post into cash account separately, that is cash book separately and creditors account separately. Most of the information which we get in incomplete records, we record in two places. One is in working note, another is in trading account, P&L account or balance sheet. This is the basic thing you have to keep in your mind. Clear? All the items, most of the items from the problem we record in two places. Under sole proprietorship final accounts, from the trial balance we record the item in one place. From the adjustments we record in two places. Under incomplete records, what we do is we record almost all information in two places. One, working note. Two, either trading account or P&L account or balance sheet. Is it clear, everybody? Yes, sir. Next one, discount and other concessions obtained. What is the entry for discount received? Creditor account debit to discount received. Here we post this discount received on the debit side of creditor account, as well as discount received is income for us, P&L account credit. Like this we have to post. Next, returns outward. Entry, creditor account debit to purchase returns account. Creditor account credit side, purchase returns deduct from purchases. Understood, students? Next, all these transactions, if we post, no need to record. If we post like this, they looks like this. Clear? Out of this some item may be missing amount. Sometimes the opening balance may be missing. Sometimes the closing balance may be missing. Sometimes the credit purchases may be missing. To solve incomplete records problem, you need good technique and whole knowledge on accounting cycle. Right. Next, bills payable account. When bills payable and creditors both accounts are prepared, yes sir, unless you know how much bills accepted by creditor, it is not possible to prepare creditors account. For that, first balance bills payable account, identify the missing amount, and the same missing amount again posted into creditors account. Then we balance the creditors account. When total creditors, bills payable both are given, first balance bills payable account, then after go to total creditors account. Is it clear, students? When a problem comes, then we discuss once again. Now, what is the probable transactions between debtors and business? How the relationship exists between debtor and business, our customers and business? We sold goods to them. When we sell goods to them, what is the entry we record? Debtor account debit to sales account. Now the relationship exists. We prepare debtor account to debit side to sales, credit sales. If we have any opening balance, we write on the debit side. Okay, next transaction, goods sold on credit over, bills receivable drawn on them. What's the entry we record? Bills receivable account debit to debtor account credit side by bills receivable. Yes or no? So if it is given in the problem that bills accepted, immediately what you have to do? You have to post this transaction in bills receivable account as well as total debtors account. Next one, bills dishonored. What is the entry for dishonor? Debtor account debit to bills receivable. The same entry is posted into both the accounts. Next, cash received from them. What's the entry for that? Cash or bank account debit to debtor account. This is posted in cash account as well as debtors account. Sales returns. What is the entry for sales returns? Sales returns account debit to debtors account. How do we record this in the examination problem solving? Debtor account credit side by sales returns. Now sales returns are shown on the credit side of trading account na deduct from sales. So this is how in two places we have to show it. Next, discount allowed. Discount allowed. What is the entry we record for a discount allowed? Discount allowed account debit to credit debtor account. Debtor account credit side discount allowed. Immediately discount allowed is expense for us P&L account debit side. P&L account debit side. Like this we have to write two places. Rebate or any other concession allowed to them. Rebate is expense for us. Rebate account debit to credit debtor account. Okay. Next, receipts of bills receivable. What is the entry for receipt of bills receivable? Cash or bank account debit. Cash or bank account debit to debtor account. Cash or bank account debit to debtor account. So debtor account credit side we post. Now cash received na. This cash received we post again on the debit side of cash and bank summary. Cash and bank summary. Next, bad debts written off. Bad debts written off. What is the entry? Bad debts account debit to debtor account. Debtor account credit side we post first. Bad debt loss. Immediately go to P&L account and write down. This is how we have to see one by one transaction. One by one transaction. Clear everybody? Now if you see total debtors account and bills receivable account, these two accounts looks like this. If both trade debtors and bills receivables are given, first balance bills receivable account. Balance bills receivable account. After balancing bills receivable account, next go to total debtors. Debtors account may be, missing figures may be sometimes opening balance, sometimes closing balance, sometimes the credit sales becomes missing figure, or sometimes the amount collected from debtors becomes missing amount. Is it clear? Anything may be missed, but you have to prepare total debtors account. Next, fixed asset account. You have to visualize. Okay, fixed asset account, normally what are the transactions we record? We show opening balance, debit side, closing balance, credit side. If any fixed asset is purchased, then what is the entry? Fixed asset account debit to cash or bank account. Fixed asset account debit side. Cash or bank summary, credit side. Payment na? Yes sir. Next, if any asset is sold, then what is the entry we record? Cash or bank account debit to asset account credit side. Clear? Cash account debit side. So fixed asset account credit side we have to post. At the same time, cash account debit side we have to post. And if any profit or loss on sale of asset, then if it is profit, then what is the entry we record? Fixed asset account debit to P&L account, or profit P&L account. Okay, fixed asset account debit to profit P&L account. P&L account credit side profit. Next, if it is loss, then what is the entry we record? Profit and loss account debit to fixed asset account. Yes or no students? Profit on loss or loss on sale. Sorry, profit on sale or loss on sale. Next one, depreciation. Sometimes the depreciation may be missing amount. Is it clear students? Yes. Sometimes after writing depreciation, they give you depreciation. Sometimes after writing depreciation, the missing figure may be asset purchased or asset sold, anything. So this is how fixed asset account is prepared. Is it clear? Next one, distinction between business expenses and drawings. They give you some expenses. Now out of them, separate business expense and drawings. Drawings are all accumulate. All the drawings accumulate all the expenses relating to personal or proprietor, accumulate and make them as drawings account. Is it clear? Next one, fresh investment by proprietor or partners. Sometimes the proprietor may invest some additional capital. Yes or no? This must be separated now. Yes. So this is considered as additional capital and added to the capital in the balance sheet. Next one. Yes, that's it students. Now if we solve one or two problems, then you can come to know that what is the important or how to solve the problems of, yeah, sometimes this type of problems they give you for 5 marks. Very simple, very simple. What they are asking, observe, This problem already given in the previous attempts. Calculate the bad debts from the following information. How we can calculate bad debts? By preparing debtors account. How can we calculate bad debts? Tell me. By preparing debtors account. Look at opening balance of debtors, debit 5 lakhs. Closing balance of debtors, credit side by balance C by D 7 lakhs. Next one, amount received in cash. Cash account debit to debtors account by cash. Next, discount allowed. Discount allowed. Discount allowed account debit to debtors account by discount allowed. Next one, credit sales entry. Debtors account debit to sales account 11,40,000. Next, bills receivable entry. Bills receivable account debit to debtor account by bills receivable. Just a minute. By bills receivable. Over. Now you balance the account. Finally, bad debts means what is the entry we record? Bad debts account debit to debtors account. Means debtors account credit side you should get the posting. Means if debit side is more than credit side, the difference is considered as bad debts. Over. Generally debtors account shows debit balance now. Yes, means amount to due from him. Already we know amount to due from him 7 lakhs. Still this account is showing debit balance. Yes, that means remaining amount considered as bad debts. So this is very important problem. Next, this is a small problem, illustration 7. You can see this. Now look at illustration 8. Very, very important problems. We try to solve 2-3 illustrations, then after RTP, then after MTP. Now look at, observe carefully. Adamji keeps his books on single entry basis. Okay, means incomplete records. The analysis of the cash book for the year ended 31st March 2022 is given. This is the cash book, students. This is just a cash book. This is just a cash book. Look at bank balance, which date 1/4/2021. Immediately you have to see whether capital balance is given or not. If capital balance is not given, we have to prepare opening statement of affairs. Opening statement of affairs. So this can be taken to the opening statement of affairs 2800. Already they have given cash book na. You need not to prepare cash book again. This 2800, take it to the opening statement of affairs. Yeah, look at 2800. Next, received from sundry debtors. Immediately open sundry debtors account. Immediately open sundry debtors account. Give posting by cash. No second thought. Yeah, by cash 48,000. Okay, so first we have to draft all the requirements. Next, cash sales. Cash sales are shown on the credit side of trading account. Na? Yes, sir. Go to credit side. Write down 62,100. Just a minute. This is just 11,000, students. 11,000 is cash sales plus credit sales also we have to show. Na? Credit sales we can identify from debtors account. Wait for that. Next, capital brought during the year. This is nothing but additional capital. Additional capital we show on the asset side of balance sheet. See, fresh capital 6,000. Over. Next, interest on investments. You people tell me interest on investment is income for us. P&L account credit. Yes, sir. P&L account credit. Interest on investment. Like this, you have to visualize. Okay, this item, whether it is taken to trading, P&L or balance sheet. At the same time, whether it is required to post in working note, that decision you have to take. Next, look at payment to sundry creditors. Sundry creditors means go to creditors account and give this posting 35,000. See, every information given in the problem is used. Every information given in the problem is used compulsorily. Compulsorily. Okay, students. Next one. Go to creditors account and give postings in creditors account. Yes, debit side to cash. Is it clear? Next, salaries. Salaries are expenses. Straight away take it to the P&L account debit side. P&L account debit side. Salaries over. Like this, you try to solve as much as possible. As much as possible. Look at the time. Whether this problem can be solved within 10 minutes or 15 minutes based on the time given. Sorry, based on the marks given. You allocate time. Within that time, you try to solve it. If you are unable to solve this problem within that time, then ignore. Ignore means leave it. Go to the next problem. Don't unnecessarily waste time on this problem because it is incomplete records. It utna hi, bas. I cannot say anything more than that. Okay, now look at. पागल हो जाएगा हम लोग वो प्रॉब्लम को देख के, right? If we see incomplete records problem na, if the balance sheet doesn't tally na, we become mad. That's why ignore. Okay, next one, general expenses. General expenses straight away P&L account debit. General expenses 2500. Next one, rent and taxes 1500. Expense na P&L account debit. We get interest. Okay, not that interest to solve the problem. Okay, drawings are deducted from capital, so straight away go to balance sheet, closing balance sheet, and drawings 3600. Next, cash purchases. Purchases are shown on the debit side of trading account na. Yes sir, it is cash purchases. Wait, we add credit purchases also, then total purchases we show 12,000 rupees. How do we get credit purchases from creditors account? How do we get credit sales from debtors account? Next, balance at bank. This is closing balance of bank na 6,400, cash in hand, closing balance of cash na 500. Both are shown on the closing balance sheet. Look at on the closing balance sheet. As much as possible you try to solve, students. You get stepwise marking. Okay, next. Over. This much of information completed. Now look at particulars of other assets. Particulars of other assets and liabilities are as follows. Observe the dates. 1st April 2021, 31st March 2022. This is beginning, this is closing. Now whatever the assets we have on the beginning of the year, with this first you prepare opening statement of affairs. With that you get opening capital. Look at the same time, show these items in the appropriate place also. Means, look at, first take sundry debtors. This is opening balance and this is closing balance. Go to debtors account, show 14,500 as opening balance and 17,600 as closing balance. Immediately. Okay, now look at what I am doing is I am going to debtors account. Debit side I am writing opening balance. Credit side I am writing closing balance. Immediately, wait. This becomes opening asset na. Go to opening statement of affairs. Write down debtors 14,500. Over. Now, whatever the closing debtors I have 17,600. This becomes asset at the end of the year. Yes sir. Go to closing balance sheet. And write down 17,600 here. We have provision. Okay. Inner column write down 17,600. Now you people tell me, this information we have recorded in 3 places. Debtors account debit side, credit side. Opening statement of affairs, closing statement of affairs. If you write like this now, you never forget even single item. Do remember. Next one. For the next information we have. Sundry creditors 5,800, opening, closing. Same. Go to creditors account, 5,400, show it as credit balance, 7,900 debit balance. Same 5,800 again we show as liability at the beginning, 7,900 as at the end of the year. Next, machinery. Machinery 7,500 here, 7,500 here. First you go to opening balance sheet, show 7,500. Yes sir, over. Next, check whether any depreciation is given. Yes sir, depreciation is given. Look at 10% is the depreciation on machinery, furniture. 10% is the depreciation on machinery and furniture. Okay, how much is the machinery value? 7,500. Deduct 10% depreciation, 750. 750 show it on the debit side of P&L account. 7,500 minus 750 show it on the credit side of asset side of new balance sheet. If you can solve if you can take one by one item and write down in the appropriate place, the problem gets completed. That's it. No need to worry. Whatever the type of problem it is, you take one item and think whether it is recorded in trading account or P&L account or balance sheet or any working note. Write down the information in the appropriate place automatically you get final answer. Now this is the information, na? All the information write down in the appropriate place, automatically you get final answer. Is it clear, students? Say yes or no, yaar. Hello, students. Next one. Furniture 1200. Go to opening statement of affairs and write down 1200. Now they said depreciation, na, how much? 10% means 120. 10% na 120. 1200 minus 120. Remaining amount, closing balance sheet. Next, inventory. This is opening inventory. Go to trading account debit side, opening inventory 3900, and go to statement of affairs, show it as a asset. Two places. Trading account debit side, statement of affairs, asset. At the same time, here they have given 5700 as closing inventory. Closing inventory, what is the treatment? Trading account credit side, one time. Go to closing balance sheet, asset. Over. Next, investments. Investments is asset. Go to statement of affairs, opening statement of affairs, show it as asset. And the same investments we have 5000. Go to closing statement of affairs and write down same 5000. The writing of this information is very, very important. Next one. Prepare final accounts. Already we have prepared na on 31st March 2022 after providing depreciation and 800 against doubtful debts. They said 800 doubtful debts. You need not to prepare. Straight away take this doubtful debts to the P&L account debit side and come to closing balance sheet, deduct provision 800. You get 16,800. That's it. Over. Now look at working note. Balance sheet of Adamji, opening state. Here what we have to do, after completion of all working notes, then come to trading account, P&L account, balance sheet. Then come to trading account, P&L account and balance sheet. Clear? Here statement of affairs is how much? 29,100. Take this 29,100 to the balance sheet. 29,100. After that, capital account. Here they have prepared capital account, or the same information you can show in the closing balance sheet asset side, liability side. Next, sales account. Here they have prepared sales account. Cash sales, credit sales. Credit sales are taken from debtors account. If you balance debtors account, then you get 51,500, that is transferred to the sales account. 11,000 cash sales, 51,500 credit sales. Next, purchases account. Cash purchases already posted na 12,000. By preparing total creditors account, here total creditors account, observe opening balance we have, cash paid we have, and closing balance we have. The difference is nothing but purchases. This is credit purchases. Already we have purchased goods worth of 12,000 plus 37,100. Total purchase 49,100. Now go to trading account here. Complete the trading account. Calculate gross profit. Bring that gross profit to profit and loss account. Now calculate net profit or net loss. Bring that net profit or net loss to balance sheet. Now balance sheet total. If you take one by one item na, automatically your final answer gets correct. Is it clear? This is our problem. Problem number 8. Now look at the another problem. Incomplete records problem. They may give you in different manners. Different manner. You cannot imagine. They may give you the information in different manner. Here how they have given information, tell me. They have given cash book summary. And they also given some assets and liabilities information at the beginning. Sometimes this is summary of cash book, na, receipts to payments they have given. But sometimes what they do, they give you just information. They will not give you this cash book. You have to prepare cash book. That problem we see now. Look at. Yeah. Illustration 9. Come to illustration 9 once. From the following data furnished by Mr. Manoj, you are required to prepare trading and profit and loss account for the year ended 31st March 2022 and balance sheet as on that date. All working should form part of your answer. Okay, anyway we do working notes now. Yes sir. Now look at one by one information. First draw all the required formats. What are the formats we have to draw? Tell me. First trading account, profit and loss account, balance sheet. Apart from this, if opening capital is not given, then prepare opening statement of affairs. Anyway, we have to prepare total debtors account, total creditors account. If bills receivable is there, bills receivable account. If bills payable is there, bills payable account. If cash and bank balances are not given, any missing amount, or in any problem cash and bank summary is not given, you have to compulsorily prepare cash and bank summary. Clear? Now look at here. The information is given as on 1st April 2021 and 31st March 2022, opening and closing. Immediately after looking creditors, what you have to do? Open creditors account, show opening balance and closing balance. Over. After looking creditors, what we have to do is open creditors account, show opening balance credit side, closing balance debit side. Over. Next, sundry expenses. If statement of affairs is not given, opening statement of affairs or opening capital is not given, this 15,770 show it as liability at the beginning, and this 12,400 show it as liability at the end. Three places: creditors account, credit side, opening balance, debit side, closing balance. Opening statement of affairs liability, closing statement of affairs liability. In these many places you have to write. Is it clear? Next one, sundry expenses outstanding. Still outstanding 600 here, 330 here. Okay, fine, we wait. Sundry assets 11,610, 12,040. Here prepare sundry assets account. It is better to, because here the asset value is changed. Observe. When the asset value not changed, you need not to prepare any asset account. But when asset value is changed, try to prepare asset account. This becomes opening balance and this becomes closing balance. Other information we try to post it. Inventory in trade. This is opening stock and this is closing stock now. Opening stock trading account debit side. Closing stock trading account credit side. Again, opening stock, opening statement of affairs asset side. Closing stock, closing balance sheet asset side. Over. Next, cash in hand and at bank. Opening statement of affairs asset side. This is 8,080 closing balance sheet asset side. If you prepare cash in hand and at bank account, then separately we have to write to balance brought down, by balance C by D. To balance brought down, by balance C by D. I will show you just a minute. Look at combined cash and bank account. To balance B by D 6960, by balance C by D 8080. Next. Yeah. Opening balance sheet prepared. Look at assets and liabilities information recorded. If you can solve the problem like this now, first you have thorough clarity in your mind. Yes, this item is taken to this place. Then after easily you can solve the problem. Next, look at next item, cash and discount credited to debtors. Cash and discount both credited to debtors account. Now we go to debtors account credit side. Actually this should be bifurcated. How much cash received, how much discount allowed. To bifurcate this, we have some hint that we can see. Next, cash. Okay, sales return. Sales return entry. Sales returns account debit to debtor account. Debtor account credit side. Sales return. Trading account credit side deduct from sales. Next, bad debts. Bad debts are recorded in first P&L account debit bad debts. Yes sir. Again debtors account credit side. Two places we have to write. Next, sales. Cash sales, credit sales. 71,810. If you know cash sales na, then automatically you can calculate credit sales. If you know credit sales na, then automatically you can calculate cash sales. Hope you are following. Yes sir. But anyway, the total sales are taken to the credit side of trading account. Next, discount allowed by trade creditors. Discount allowed by trade creditors is income for us, credit side of P&L account, and this amount again we show it on the debit side of creditors account. Next, purchase returns. Purchase returns entry creditor account debit to purchase return. Creditor account debit side, purchase returns deduct from purchases on the debit side of trading account. Next, additional capital into bank. What is the entry we record? Bank account debit to capital account. Additional capital na. So first what we do? Post this in the combined capital account. See, capital 8,500. Again go to balance sheet, add additional capital 8,500. If you solve one by one item na, then you can come to know that the real adjustments. Next, realizations from debtors paid into bank. realizations from debtors paid into bank. Means we have received amount from debtors now. The same amount we posted into bank. Entry bank account debit to debtors account. Here observe how much amount we credited to debtors account. Cash and discount 64,000. From 64,000, how much amount you collected from debtors cash in the form of cash? 62,500. Means 1500 rupees is discount. 1500 discount. Yes, this is the hint we have to apply. Total amount they said credited to debtors account 64,000, whereas how much amount received actually 62,500, means 1500 is a discount, and this 1500 discount is shown on the debit side of profit and loss account. Clear? Next one. Next, okay, cash purchases. Cash purchases. Straight away, cash account credit side. Cash account credit side. Look at cash and bank summary. Purchases. Cash purchases. Yes, 1030. Next, cash expenses. First, write down in the cash and bank summary credit side. After that, go to P&L account debit side and write down expenses. Paid by check for machinery purchased. We have purchased machinery during the year and we have paid check. I told you already, prepare machinery account. Prepare machinery account. It is better to prepare machinery account. Look at machinery account. Yeah, machinery account they have not prepared, but you can prepare that. Observe 11,610 is the opening balance, plus during the year how much machinery purchased, sorry, sundry asset. During the year how much machinery purchased, tell me. For 430, add 430, means total become 12,040 na? Total become 12,040. Yes sir, in the new balance sheet, that means closing balance sheet, we write 12,040. Here they said there is no information relating to depreciation. That's why we have ignored the depreciation. They have given hint point, look at, no depreciation on fixed assets. Next one. Next one. Household expenses drawn from bank. This is nothing but drawings. Drawings account debit to bank account. So first cash and bank summary credit side. After that drawings. Drawings are deducted from capital. Next, cash paid into bank. This is contra entry. This is contra entry. Observe carefully. Contra entry. Debit side 5,000. At the same time credit side 5,000. Contra entry. Next, cash drawn from bank. Again, this is also contra entry. Cash account debit to bank account. Contra entry. Look at 9,240. 9,240 debit, 9,240 credit, because it is combined cash and bank summary. Next, cash in hand opening balance. Cash in hand opening balance. Cash in hand given, and observe carefully here. They said cash in hand and cash at bank closing. How much they have given? 8,080. 8,080 they have combinedly given 8,080 minus, at the end they said cash in hand on 31st 3 2022 1200, means remaining 6,680 cash at bank. Remaining 6,880 cash at bank. Yes or no? Yes sir. Look at, but anyway they have given it here combinedly, but at the time of showing in the balance sheet you can show it separately or combinedly, no problem. Next, that's it. Next, checks issued to trade creditors. Entry for checks issued. Creditors account debit to bank account. Creditors account debit side. Creditors account debit side and bank account credit side. Over. So all information almost we have taken to various places. Now what you have to do is go to working note first. Balance combined cash and bank summary. Here we are getting the balancing figure as cash sales. We are getting the balancing summary as cash sales. This is important. Next, total debtors account. Balance total debtors account. You are getting opening balance as balancing figure. Look at, identifying the balancing figure is very, very important, students. Next, creditors account. Observe what is the balancing figure here. Opening Opening balance 15,770. 15,770. Next one. This is closing statement of affairs. Sorry, opening statement of affairs. What is the balancing figure? Opening capital 26,770. Next, here they said they have given one adjustment for expenses paid in cash. If you observe how much expenses we have paid, cash expenses 9,570. Cash expenses paid. But if you observe at the beginning of the year, how much is outstanding? 600. Means current year we have paid? Yes sir, deduct 600 rupees. Because this amount out of 9,570, 600 is relating to previous year. We should not show it in the current year P&L account. 9,570 minus 600. So we get 8,970 plus current year still outstanding 300 na, add, sorry, 330 na, add 330. Then total becomes 9,300. And this 9,300 we show in the P&L account debit side, on the debit side of P&L account. 9,300. Is it clear, students? Discount 1,500, bad debts. Like this we complete the problem. As much as possible you try to complete. As much of as possible. Clear? Now we look at the next problem. Illustration 10. Almost in the RTP and MTP also they have given similar type of problems with a slight modification. Okay, so I will explain illustration 10. You people try to solve RTP and MTP problems. If you get any doubt, you can send me to my personal number, Telegram. I will respond as much early as possible. Okay, now look at illustration 10. After completion of this chapter, we start a NPO chapter, not for profit organization chapter. Now look at illustration 10. Mr. Anup runs a wholesale business wherein all purchases and sales are made on credit. Yeah, first condition is what? All purchases and sales are made on credit. No cash purchases, no cash sales. No cash purchases, no cash sales. Okay now. Next, he furnishes the following closing balances. Closing balances. He said following closing balances. 31st March 2021 and 31st March 2022. 31st March 2021 is the closing date for the financial year 2021. The same becomes opening on 1st April 2021. 1st April 2021. With these balances, we prepare statement of affairs, opening statement of affairs, so that we can calculate opening capital. And these are the closing balances. We take them to the closing balance sheet. If any fixed asset requires any adjustment for depreciation or something, then we do it accordingly. Otherwise, we take as it is to the closing balance sheet. Clear, students? If you get this type of information, it is very interesting, because this every item we have to write in 2-3 places. 3 places. Sundry debtors, opening balance, closing balance. Opening statement of affairs, asset, closing statement of affairs. 4 times we have to write. Don't forget this. Okay. Now look at sundry debtors. Opening balance 70,000, closing balance 92,000. What I am doing is, this is something interesting, students. Observe carefully. Sundry debtors, opening balance 70, closing balance 92. And I am preparing opening statement of affairs also. Debtors 70,000. And closing balance sheet, debtor 92,000. Hope you are following. Yes, students, thumbs up. Thumbs up. Not that thumbs up. Like. Next. Bills receivable, opening balance 15,000. Bills payable 6,000. Bills receivable, open bills receivable account. Opening balance 15, closing balance 6,000. 15,000 again, closing statement, opening statement of affairs asset 6,000. Closing balance sheet. Next one, bills payable 12,000, 14,000. 12,000 bills, open bills payable account. Opening balance 12,000, closing balance 14,000. Bills payable liability, opening statement of affairs liability side, closing balance sheet liability side. Next, sundry creditors. Sundry creditors, opening balance 40, closing balance 56. Again, 40,000 is shown on the liability side of opening statement of affairs. 56,000 rupees is shown on the liability side of closing balance sheet. Next, inventory. This is opening inventory now, and this is closing inventory. First, go to trading account. Opening inventory, to opening stock 1,10,000. By closing stock 1,90,000. Visualize. Again, 1,10,000 is shown on the asset side of opening statement of affairs, and 1,90,000 is shown on the assets side of closing balance sheet. Next, bank 90,000, 87,000. Immediately open bank account, cash account also. Both balances given now. Open 2-column cash book, cash with cash and bank column. Open 2-column cash book with cash and bank column. Before that, 90,000 opening statement of affairs, asset side. 87,000 closing balance sheet, asset side. When you open bank account now, opening balance 90, closing balance 87. Cash now, opening statement of affairs, asset 5,300, closing balance sheet, asset. Immediately we open working note now, this becomes opening balance, to balance B by D. Look at, I will show you cash and bank accounts. Just a minute. Yes, look at summary of cash and bank. 2-column cash book. It's like 2-column cash book. Cash and bank. Opening balance 5,200, 90,000. Next, closing balance 5,300, 87,000. This problem becomes little bit lengthy problem, students. Lengthy problem. Now look at. Okay, observe carefully. Okay, next. Summary of cash transactions during the year 21-22. Summary of cash transactions during the year 21-22. Now, from here, what we do is, first we record this transaction, whether it is cash or bank, in the cash and bank summary. After that, from there, we take it to the either trading or P&L or balance sheet or any working note, means debtors account, creditors account, like that. Okay, look at. Deposited to bank after payment of shop expenses, means indirectly they are giving shop expenses. What are the shop expenses? Tell me. 600 per month, means 12 months, 7,200. First of all, shop expense, write down on the payment side 7,200. Immediately it is expense na, P&L account debit. Next one, salary 9,200 per month. Salary 9,200 per month. So 9,200 into 12 months. 9,200 into 12 months. Total 1,10,400 on the payment side first. 1,10,400 on the payment side. Just a minute. Salary 1,10,400 on the payment side of cash column, and shop expenses. Again, both are taken to the P&L account debit side. Salary, shop expenses. Hope you are following. Yes, sir. Next one. Next, personal expenses means drawings. 1,400 per month. So 1,400 into 12. 16,800 drawings. Okay. After all these cash expenses, how much you have deposited? 7,62,750. It is contra entry. Bank account debit to cash account. Look at. Drawings 16,800. Next, see, contra entry 7,62,750, 7,62,750 contra entry. After that, drawings 16,800. Like this, we have to write one by one item. Next. Yes. Now come to next items. Cash withdrawn from bank 1,21,000. Again, this is contra entry. So this is shown on the summary of cash and bank transaction. Next, cash payment to suppliers. Creditor account debit to cash or bank account. Creditor account debit side, bank account credit side. For suppliers, and 25,000 for furniture. We have purchased furniture. Furniture account debit to bank account. Bank column credit side. Sorry, this is cash payment na? Yes. cash column 25,000, and furniture is asset na, balance sheet asset side. Next, checks collected from customers but dishonored. We have collected checks from customer. First, what is the entry we have to write? Bank account debit to customer's account. This is the first entry we have to write. Bank account debit to customer account means bank column entry, customer account credit side entry. Now the same check is dishonored. The same check is dishonored. Again, the above entry is just reversed. What is the reversal entry? Debtor account debit to bank account. Sir, shall we ignore this? No, 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 don't ignore. Compulsorily you have to show as note. That means you have to mention this in the cash and bank summary. Next, bills accepted by customer. What is the entry? Bills receivable account debit to debtors account. Bills receivable account debit side, debtors account credit side. No need to write anything in the final accounts. Bills endorsed. Generally, to whom we endorse bills? Creditors. Entry. Creditors account debit to debtors account. Creditors account debit to debtors account. Sorry. Creditors account debit to bills receivable. Sorry. Creditors account debit to bills receivable. So, creditors account debit side, bills receivable credit side. Next, bills discounted 20,000, discount 750. Entry. Bank account debit to bills receive, bank account debit 20,000, discount 750 to bills receivable 20,000 750. Sorry, 750 is excluding bill na, 750 is excluding bill. Go to bank summary, write down 2 bills receivable 19,250, that exclude discount. Remaining 750 is discount expense na, P&L account debit side. P&L account debit side. Same posting we write in bills receivable account also. Bills receivable account also. Credit side. By bank, by discount. Whatever we are studying, we have to post in two places. Next, bills matured and duly collected. Entry. Bank account debit to bills receivable. Bank account, bank column debit side. Bills receivable credit side. Bills accepted means we accepted bills now. So creditors account debit to bills payable account. Both the accounts we give posting. Paid suppliers by check. Suppliers account debit, creditors account debit to bank account. So suppliers account debit side, bank column credit side. Received 20,000 on maturity of life insurance policy of the proprietor by check. This is treated as additional capital. This is treated as additional capital. What's the entry we record? Bank account debit to additional capital, and additional capital is shown on the liability side of balance sheet as a addition to the opening capital. Next, rent received 14,000 by check for the premises owned by the proprietor. Actually, these premises are owned by the proprietor. We received rent. This is also treated as additional capital. This is also treated as additional capital, because who is the owner of the property? Proprietor. Proprietor received rent. Yes, that is his income now, but that is recorded in the business premises. So additional capital. Look at bank and cash summary first of all. Yes, 20,000 and rent received 14,000. This 20,000 plus 14,000, 34,000 is treated as additional capital and it is added in the balance sheet. See, 20,000, 14,000. Next, a building was purchased on 30th 11/2021 for opening a branch for 3.5 lakh. We have purchased a building on 30th 11/2021 for opening a branch for 3.5 lakh, and some expenses were incurred on this building, details of which are not maintained. This point is very, very important. They said we have purchased a building for 3.5 lakh, but they did not mention how much expenses we have incurred. How much expenses we have incurred. Now what we have to do is, we go to cash and bank summary. We go to cash and bank summary. Whatever the balance we get in the bank column, that balance is considered as purchase of building. In this problem, this is very, very important factor. Is it clear, students? Next one. Electricity and telephone bills paid by cash 18,700, due 2,000, 200. Electricity and telephone. First of all, 18,700 is posted on the credit side of cash column. Next, in the P&L account, how much amount we show? 18,700 plus due amount 2,200. 18,700 plus 2,200. Total 20,900 we show on the debit side of P&L account. 20,900. And the liability outstanding amount is shown on the liability side 2,200. 2,200 telephone charges. Clear? Next, all these are cash and bank summary items. All these are cash and bank summary items. Now look at other transactions. Other transactions. What are other transactions? Claim against the firm. Claim against the firm for damage 1,55,000 is under legal dispute. Legal expenses 17,000. The firm anticipates defeat in the suit. Means we have to create provision for this. We have to create provision for this. 1,55,000 create provision. Look at provision for claims for damages 1,55,000. Sir, what about legal expenses, sir? Legal expenses normally we pay. Debit side expense 17,000. And this provision for claims for damage, again we have to show it on the liability side of balance sheet. 1 lakh, because we have not yet paid now. If you pay, it can be ignored, but it is not paid. 1,55,000. In this problem, this point also very important. Next one. Look at goods returned to suppliers entry. Sales returns account debit. Sorry, suppliers now. Creditors account debit to purchase returns. Creditors account debit side. Purchase returns increases now. Go to trading account debit side. Deduct it from purchases. Next, goods returned by customers. Sales returns account debit to debtors account. Go to debtors account credit side. Give posting. At the same time, go to trading account credit side. Deduct from sales. Next, discount offered by suppliers means discount received. Suppliers account debit to discount received. Go to suppliers account first, working note, debit side, to discount received. And this discount received becomes income, credit side, P&L account, credit side. Discount offered to the customers, entry. Discount allowed account debit to customers account. Go to customers account, credit side, by discount allowed. Next, go to P&L account, debit side, to discount allowed, over. Next, the business is carried on at the rented premises for an annual rent of 20,000, which is outstanding at the year end. Means it's an outstanding liability. First, show it on the debit side of P&L account because it is an expense. Again on the liability side of balance sheet, over. This is how we try to solve the problem. After that, what is pending? Look at one first closing working notes. First working notes, look at sundry debtors account. After that, bills receivable account. Bills receivable account. Yes. Here, bills receivable account, there is one important point. When we are balancing bills receivable account now, when we are balancing bills receivable account shows some missing amount. Some missing amount. What is that missing amount, sir? Observe carefully. In the bills receivable account, debit side we have opening balance, credit closing balance. Next, bills accepted by debtors, bills endorsed, bill discounted, bills collected. Every information is there. Then debit side is more. Bills receivable account debit side is more. Why it is debit? Why the debit side is more? This is the question mark. So that here we have to assume it as there is 3,000 rupees difference. For this amount, the bill gets dishonored. This is very important point. 3,000 worth of bills dishonored. What is the bill dishonor entry? Debtor account debit to bills receivable account. Debtor account debit side. Debtor account debit side to bills receivable 3,000. Bills receivable account credit side by debtors 3,000. Over. Unless you complete this, it is not possible to complete debtors account. And what is the missing amount in debtors account? Look at in the debtors account, if you observe, amount collected from debtors is not given. How much amount collected from debtors? Not given. So that this amount is treated as missing figure. So these two accounts are completed. Now come to creditors account and bills payable account. In the bills payable account, the missing amount is nothing but bills honored. Bills honored. And this amount is posted to cash summary. Next, creditors account, what is the missing figure? Credit purchases. This is shown on the debit side of trading account. After that, summary of cash and bank. Here the summary of cash and bank, missing figure on the bank column is 3,72,000. This is considered as purchase of building, and the same purchase of building is shown as an asset on the asset side of balance sheet. Next, opening statement of affairs. The balancing figure in the opening statement of affairs is opening capital. This is shown as capital at the closing balance sheet. Opening capital as closing balance sheet, in closing balance sheet 2,38,200. After this, trading account balance, gross profit, and this gross profit is carried to the profit and loss account, and that is added to capital. Finally, we get total of balance sheet. This is a very lengthy problem, students. Very lengthy problem. If you get this type of problem, they may ask it for 10 marks or 12 marks. Clear? So this is our accounts from incomplete chapter. We have discussed three models of giving information. If you can solve these three models of giving information, so whatever the type of problem they give you, with the basic idea you can solve it. Suppose the question paper is very, very, very tough. Yes, in any question paper, there is a scope to get minimum to minimum 50 marks. There is a scope to get minimum to minimum 50 marks. Don't forget this. Don't forget this. You get 50 marks out of the toughest question paper only when you answer them at least 80%. Suppose now I am solving this question. At least I have to solve it 80%. 20% I don't know, or there is no time is not sufficient for me to solve the entire problem of incomplete records. Okay, at least 70 to 80% you solve, you get proportionate marks. You get proportionate marks. Is it clear, students? Is it clear, students? Yes, sir. Right, now we take some 15 minutes break, have some dinner or have some tiffin or coffee, whatever you want. Again we meet after 15 minutes. Now the time is 8:20. We meet sharp by 8:35 or 8:40. Okay, join soon. Now we discuss. After that we discuss NPO. After completion of NPO, we start partnership today itself. Is it clear, students? Yes. Now take a break. Hello. Hello students. Welcome back after the break. Let me check, am I audible or not? Am I audible students? Respond. Okay. Yes. Now we start our discussion with the not for profit organizations. Very important chapter. You get compulsorily a question from this. Already we discussed, na? We get three problems from three chapters: final accounts of sole proprietorship and not for profit organizations and incomplete records. Okay students, right? Now look at, yes, so which type of problems we get, sir? Which type of problems we get? Mainly, see, our main focus of revision lecture in these 2 days is how to solve the problem. Here I am, here the time will not permit to explain each and everything, okay, and in-depth concepts, and to cover all problems. Time is the limiting factor, that too you have to study now. That's why here my main focus is, if you get this type of problem, then how do you try to solve it? The process I will explain. I will explain the process of solving the problem. Is it clear students? So that you can apply the same process for any number of problems. Means final accounts, there is one process. Incomplete records, there is one process, technique. Instead of calling it as process, we can call it as technique. And to solve the problems of not for profit organization, what is the technique we have to follow? What is the technique we have to follow? For that, first you need to understand which type of problem you get in the exam. Which type of problem you get in the exam, that you need to understand. Already we understood, in case of final accounts of non-manufacturing entities, which type of problems we get? Yes, these type of problems we get. Manufacturing entity, this type of problems we get. And in case of incomplete records, which type of problems we get? Statement of affairs and conversion method. If you get a problem of statement of affairs, how do we solve? If you get a problem on conversion method, then how do we solve? All these things we have discussed now. In the same manner, if you get a problem on not for profit organization, then how do we solve it? Right. Now look at first one. Preparation of, first type of problem is preparation of income and expenditure account, preparation of income and expenditure account and balance sheet from receipts and payments account and other information. This is one type of problem, and most of the times this type of problem they have asked in the exam. Next one, preparation of receipts and payments account and balance sheet from income and expenditure account and other information. Majority cases they may ask this type of problem. We have to prepare income and expenditure account and balance sheet from receipts and payments account and other information. We know the financial statements of not for profit organizations consist of receipts and payments account, income and expenditure account and balance sheet. Receipts and payments account is nothing but summary of cash and bank transactions. Income and expenditure account looks like profit and loss account, with the exception that in case of profit oriented organization, the difference between profit and loss account, the difference between debit and credit of profit and loss account is called profit, net profit or net loss. But in case of not for profit organization, we call it as surplus or deficit. If credit side is more than debit side of income and expenditure account, then we call it as surplus. If debit is more than credit, we call it as deficit. Surplus of deficit. In case of profit organizations, the profit, especially proprietorship, the profit is added to the capital account, and finally we show closing capital in the balance sheet. In case of partnership, the profit is distributed among partners. In case of companies, the profit is distributed among shareholders in the form of dividend. But in case of not for profit organization, the surplus is not distributed among its members. Surplus is added to the capital fund. Is it clear, students? Yes. Now here we try to focus on solving some problems. Observe carefully first. Yes. Yeah. First, look at the format of receipts and payments account. Debit side, what we write? Opening balance of cash and bank. Debit side, we write opening balance of cash and bank. And this receipts and payments account, here most of the students they get confusion. Why, sir? Why? Because receipts and payments account is given. From this, you have to prepare income and expenditure account. What are the transactions receipts and payments account records, and what are the transactions or which accounts we show in the P&L account? Receipts and payments account records the transactions. Transactions means opening and closing balances of cash and all receipts and all payments, whereas profit and loss account records expenses and incomes. By all the nominal accounts, ultimately we transfer to the profit and loss account and they gets closed. The problem comes from receipts and payments account, which items are taken to the profit and loss account and which items are taken to the balance sheet. In case of sole proprietorship, in case of final accounts of sole proprietorship, they give you trial balance. There we have identified which items are taken to trading account, profit and loss account and balance sheet. In case of incomplete records, we have identified whether this particular item is taken to the trading account, P&L account and balance sheet. But under not for profit organization, from receipts and payments account, here they give you receipts and payments account and other information. Receipts and payments account and other information. Now we have to identify which item is taken to income and expenditure account and which item is taken to the balance sheet and which item requires a working note. Is it clear, everybody? Yes. So understanding this receipts and payments account is very, very important. Is it clear? Now look at observe carefully here. Right. Now this is receipts and payments account. Receipts and payments account. Receipts and payments account records receipts and payments account. Debit side we have opening balances. To balance brought down. Cash, bank. Next, buy balance carried down. Buy balance carried down. Cash, bank. Okay. First, I will talk about this. This information, opening balance and closing balance information, is taken to, here we prepare two balance sheets. One is closing balance sheet. One is closing balance sheet. And another one is opening balance sheet. In case of incomplete records, we have prepared opening statement of affairs. For what purpose? To know opening capital. At the same time, in case of not for profit organizations also, we need capital fund at the beginning of the year. At the beginning of the year, how much capital fund we have? That information we need. If it is not available in the problem, then we need to calculate. How the statement of affairs is prepared? By writing the assets and liabilities on opening date. Here also same. By writing the assets and liabilities on the opening date, we prepare opening balance sheet. From this opening balance sheet, we calculate opening capital fund and that is taken to the closing balance sheet. Look at this is opening balance sheet. Now, whatever the opening balances we have, cash and bank, both balances are taken to the opening balance sheet. Both balances are taken to the opening balance sheet. Do remember. Yes, sir. Over. Next one. Closing balance of cash and bank are taken to the closing balance sheet. Without any second thought, These two are taken, just a minute. These two are taken in closing balance sheet asset side. These two are taken on the closing balance sheet asset side over opening balance, closing balance. Clear? Next, this receipts and payments account records capital receipts. Capital receipts. Sir, what is the meaning of capital receipts? Capital receipts are nothing but not revenue receipt. Yes, sir. Capital receipts nothing but not revenue receipts. Okay, what are capital receipts? Nothing but, suppose I have excuse me, I have sold one asset. I received cash. This is receipt for me. It is capital receipt because this amount I will not receive frequently, na? Yes, sir. I have taken some loan from bank, small loan from bank. So it is a capital receipt for me, and I have received some capital grants from government. Grants from government for a specific purpose. It is capital receipt for me, and I have received some donations from outsiders for a specific purpose. It is a capital receipt for me. These are recorded in the receipts and payments account. Next one, receipts and payments account also records revenue receipts. Revenue receipts. So revenue receipts are nothing but what? These are the amounts frequently the business will receive. Example, subscriptions. Subscriptions are received by the not-for-profit organizations from their members frequently, every month or every quarterly or every yearly, sometimes every once in a 6 months. And some interest or dividend or commission, whatever it may be. Not commission because it is not-for-profit organization. Okay, all these things, similar nature. These are revenue receipts. Okay, any um, any donation, okay, general donations or revenue donations or donations to meet some specific not specific for maintenance purpose, or we have received some government grant to maintain our building. All those things revenue receipts, right? Now, how can I identify whether it is a capital receipt or revenue receipt? You have to utilize your common sense. By looking that particular item, you have to classify it as revenue receipt or capital receipt. If it is revenue receipt, take it to the closing balance sheet. Take it to the closing balance sheet. Not all, sorry, capital receipt. Not all capital receipts are taken to the closing balance sheet. Suppose I have sold one asset. It is not shown on the liability side of balance sheet, na? It is not shown on the liability side of balance sheet. Okay, balance sheet, asset side or liability side. Observe. Next, revenue receipts are there. Revenue receipts are there. Here we prepare income and expenditure account, na? Here we prepare income and expenditure account. All revenue receipts are taken to the credit side of income and expenditure account. All revenue receipts are taken to the income and expenditure account. After bringing the revenue receipts to the income and expenditure account, we have to do certain adjustments. Sir, what are those adjustments, sir? Receipts and payments account records receipts irrespective of its year. Its year relating to. Receipts and payments account records all receipts whether they are relating to current year or previous year or next year. Irrespective of the year, it records the receipt because receipts and payments account records only receipts, na? It is receipt, sir. Yes, sir. I don't mind whether it is relating to current year or previous year or next year. I don't mind, sir. Okay, record it first. From there, you bring that revenue receipt to the income and expenditure account. After bringing revenue receipt to the income and expenditure account, do certain adjustments. If any cash paid relating, if any expense paid relating to the previous year minus, you have to remember only one thing. In the income and expenditure account, we show only current year expense and incomes. Current year expense and incomes. This is the fundamental rule. Current year expense and incomes. Expense may be paid or payable. Expense paid shown in the receipts and payments account. But incomes received are shown in the receipts and payments account. But what about expenses payable and incomes receivable given as additional information? Given as additional information. Hope you are following, students. Next, receipts and payments account credit side. Credit side. By capital expenses. By capital payments or capital expenses. Suppose I have purchased one building. We have purchased one building. It is my capital payment. What's the entry I record? Bank account, sorry, building account debit to bank account, receipts and payments account. Capital payment, or I have repaid the loan. Loan account debit to bank account. Or I have purchased any asset, furniture account debit to cash or bank account. All these are capital payments. All these are capital payments, do remember. Next, all these capital payments we have to show closing balance sheet asset side based on the situation, right? Next one, credit side we write by revenue expenses. Revenue expenses, observe carefully, revenue expenses. Revenue expenses, right? All revenue expenses are taken to income and expenditure account debit side. All revenue expenses are taken to income and expenditure account debit side. After bringing these expenses into income and expenditure account debit side, now what we have to do is we have to do certain adjustments. This is how we prepare income and expenditure account. Observe carefully. Is it clear, students? Now we try to solve one problem. Then after you can understand. Clear? Now look at. The procedure of solving this problem also similar to our final accounts problem. That's why there is a similarity between preparation of final accounts of sole proprietorship and okay, look at here, and incomplete records and NBO. Three are preparation of financial statements, but final accounts of sole proprietorship, final accounts of accounts from incomplete records, both are similar nature. But here also preparation of final accounts of not for profit organization, that's it. But the procedure, the method is similar. Look at illustration 4 first. Following is the receipts and payments account of New Bird 40 Club for the year ended 31st March 2022. Look at first one, they have given receipts and payments account. Identify opening balance, closing balance first. So this is opening balance, sir, and this is closing balance, sir. Opening balance is shown on the debit side of opening balance sheet. Closing balance is shown on the credit side of closing balance sheet. Clear? Now, after the receipts, next, what is the next step? Identify whether it is a capital receipt or revenue receipt. Now look at subscription. Subscription always revenue receipt. Identify the year, because already I said receipts and payments account records all receipts and payments irrespective of the year it is relating to. Means it may be relating, the receipt or payment may be relating to current year or previous year outstandings or next year incomes also received in advance. But in the income and expenditure account debit side, we have to show all expenses relating to current year, whether they are paid or payable. Here we ignore previous year items, next year items. At the same time, incomes relating to current year, yes, record it irrespective whether they are received or not. And here we ignore previous year incomes, receivable, future incomes already received. Here we ignore. Only current year items we show. Okay, is this logic simple? Yes, sir. Now look at First, receipt side, identify whether it is capital receipt or revenue receipt. First, subscription is always revenue receipt. Here, year. They said 31st March 2022. What is the current year? What is the current year? 21, 22 is the current year. 21, 22 is the current year. Here they said 2021 means it is previous year. 2021 means previous year. 21, 22 is current year. In our income and expenditure account, we take only 3,55,000 current year receipt. To this, we add still receivable. Okay, now look at subscription. How much amount? Straight away, you can take 3,55,000 or put together how much? Put together how much? Tell me. 65,000 plus 3,55,000. How much? 4,20,000. Here, what they are doing is they are taking total amount first. Okay. Out of this total amount, how much amount relating to previous year? Sir, 65,000 relating to previous year. Here itself you can identify, na? Yes. Deduct that 65,000 rupees. Deduct that 65,000 rupees because it is relating to previous year. Yes, sir. Next one. Wait for other information. Next to donations. Donation 55,000 is given. Okay. Now look at if any specific information given relating to donation, then do accordingly. Otherwise, simply take it to the credit side of income and expenditure account. 55,000. Just a minute. By donation 55,000. Next one. Entrance fees. Generally, entrance fees is capitalized. Means taken to the balance sheet. It is treated as capital receipt. Unless and until they specify anything, it is treated as capital receipt shown on the liability side of balance sheet as an addition to the capital fund. If anything specified in the problem, do accordingly. They said capitalize 50% of the entrance fees. Means remaining 50% they said take it as income. P&L account, sorry, income and expenditure account credit. Out of 85,000, half amount means 42,500. 42,500 here. Is it clear, students? Yes, it is completed. Now, receipts all completed? Yes, sir. Now come to payment side. Salaries and wages. Payment, na, straight away take it to the revenue expense. Straight away take it to the income and expenditure account debit side. 1,65,000. Look at any adjustment is there. Outstanding salaries and wages 40,000 for the year ended 31st March 2022. Current year outstanding, yes, add 40,000. Total salaries to be shown in the income and expenditure account 2,05,000. Hope you are following. Next one, office expenses. This is revenue expense. Show it on the debit side 35,000. So here you have to identify whether it is revenue expense or capital expenditure. Next one, sports equipment. Sports equipment is asset. Purchase of sports equipment is asset. But they said depreciate sports equipment by 25%. So 3,42,000 into 25%, that comes 85,500. And remaining amount balance sheet asset side. Hope you are following, students. Next one, telephone charges, revenue expense. Take it to the income and expenditure account. Telephone charges. If any outstanding is there, add. Out of these telephone charges, if any amount paid in the previous year, minus. Next one, electricity charges, revenue expense. Income and expenditure account debit side. Next, traveling and conveyance, revenue expense. Income and expenditure account debit side. Is it clear? Now, closing balance. Already I said closing balance sheet asset side. That's it. Every item from receipts and payments account considered. Now look at additional information. Outstanding subscription for the year 55,000. Still subscriptions receivable for the year 55. In our income and expenditure account, we show subscriptions relating to current year only. Now subscriptions relating to current year, how much? Received 3,55,000. Still receivable 55,000. Total becomes 4,10,000. So here what we can do, instead of taking 4,20,000, straight away you can take 3,55,000. Straight away you can take 3,55,000 plus 55,000. Total 4,10,000 you can show outer column. The same they did here. Look at here, they have taken total subscription received. From that, they deducted previous year subscriptions, current year subscriptions added. That's it. Next, outstanding salaries completed, depreciate sports equipment completed, capitalize 50% of the entrance fees completed. Prepare income and expenditure account of the club from the above particulars for the year ended 31st March 2022. This is how we prepare income and expenditure account. In some problems, the items are more. The logic is same, but this receipts and payments account contains more number of items and additional information contains more information, but the process is same. From the income and expenditure, from the receipts and payments account, we identify whether it is a capital receipt or revenue receipt. All the revenue receipts taken to the income and expenditure account credit side. After bringing the revenue receipt, do certain adjustments. Still current year receivable, add. We received previous year amount, minus. We received next year amount, minus. Do all these adjustments. Next, out of the payments, identify revenue expenses and capital expenses. All revenue expenses, first bring it to the income and expenditure account. After bringing the revenue expense to income and expenditure account, check when any other still outstanding expense is there, or any expense we have paid from current year, previous year outstanding paid in the current year, minus. If any prepaid expense is there, minus. Same logic which we have followed in case of sole proprietorship final accounts. Is it clear, students? Yes, sir. Next, this is simple problem. Yeah, this problem we have to discuss. Illustration 6, preparation of subscription account. Most of the students, they get confusion here. Why? Because lack of clarity on concept. Now look at concentrate illustration 6 so that you get clarity on subscription. Next, during the year ended 31st March 2022, the subscriptions received by the Jaipur Literary Society 4.5 lakh. First of all, what is the entry we record? Bank account debit to subscription account. What is the entry we posting? By bank account 4.5 lakh. Is it clear here? Yes, sir. 4.5 lakh. Next one. These subscriptions include 20,000 received for the year ended 31st March 2022. We are in which year? 21-22. They said 20,000 relating to previous year. For the previous year subscriptions outstanding, what is the entry you have been recorded in the previous year itself? Subscription receivable account debit to subscription account. As on 31st March 21, what is the entry you have been recorded already? Subscription receivable account debit to subscription account. This is the closing entry we have recorded, or adjusting entry we have recorded. Adjusting entry. Whatever the adjustment entries you have recorded on 31st March 2021, they become reverse in the immediate financial year, that is 21-22. Whatever the adjustments you have recorded in the previous year 31-3-2021, they become reverse at the beginning of the new financial year 21-22. So what is the entry recorded for outstanding subscription? Subscription receivable account debit to subscription account. When it comes to 21-22, this becomes reverse entry. Subscription account debit to outstanding subscription 2021 20,000. Here students will face difficulty. Observe carefully. Next one. On 31st March 2022, subscription due but not received were 15,000. 31st March 2022, still we have to receive subscription. Then what is the entry we record? Subscription receivable account debit to subscription account. Subscription account credit side by subscription receivable. How much? 15,000. Next, advance subscription received for the year ended 31st March 2022 but pertaining to year 2023. Current year we received some subscription amount, but it is relating to the next financial year. Then what is the adjustment entry we record? Subscriptions account debit to subscriptions received in advance account. Adjusting entries now. So subscriptions account debit to advance subscriptions 2023 26,000. Next one, the subscriptions received in advance for the year ended 31st March 2021. Previous year we received in advance. Relating to current year 21-22. Previous year, what is the entry you have recorded? Same, subscription to subscription received in advance. Now, the same entry becomes reverse in 21-22. That is subscription received in advance account debit to subscription account. Here by advance subscription 21. After writing all these things, now you balance subscription account. Automatically you get how much amount to be transferred to the income and expenditure account. Credit side, all subscription received plus adjustments. Debit side, subscriptions adjustment. Remaining amount nothing but amount to be transferred to the income and expenditure account. This is important. Sometimes in the examination problems, they may ask you differently. Means they will not give you how much subscriptions received in the current year. They will not give you how much subscriptions received in the current year. But they give you how much amount to transfer to. They give you how much amount to transfer to income and expenditure account. In that case, you balance reverse. First total debit minus total credit, then you get how much cash received during the year as subscription. This type of problem you may get for 4 marks, or the same information may be given in the problem, 10 marks or 12 marks problem. Same information may be given in the 10 marks or 12 marks problem. Clear everybody? Now look at illustration 7. Illustration 7. Not illustration 7. Yeah, illustration 8 observe. Illustration 8 observe students. The following was the receipts and payments account of X Club for the year ended 31st March 2022. Okay, this is the receipts and payments account. Now identify which items are taken to income and expenditure account, which items are taken to closing balance sheet, which items are taken to opening balance sheet. When opening balance sheet is prepared, when the opening capital fund is not given. When the opening capital fund is not given, then we need to prepare opening balance sheet. When opening capital fund is given, you need not to prepare any opening balance sheet. Fine. First item, cash in hand. Cash in hand taken to the opening balance sheet. Taken to the opening balance sheet. If you want, I will show you. Yes, balance sheet on 1st April 2021. Opening balance sheet. Cash 100. Next one, balance at bank as per passbook. Balance at bank as per passbook. Deposit 2230, current account 600, bank interest. Okay, only these two balances. Only these two balances. This is very important, students. This problem now, when we was in CA IPCC in 2010, same problem carried since 2010 or previous also. Okay, earlier this chapter is there in IPCC, now they shifted to CA foundation. The same problem is carrying. Here you can, if you observe, this balance is as per passbook. Generally in our books of accounts, we show the bank balance as per our cash book. After preparing BRS, what we do, we find the ultimate balance as per our cash book and we show it in the receipts and payments account or in the balance sheet. But here, which balance they have given? Balance at bank as per passbook is given. Passbook balance is given. But in our books of accounts, which balance we have to show? Cash book balance. Cash book balance. Bank balance as per cash book. Bank balance as per cash book. Here also closing balance is given as per passbook. Observe. Deposit account we cannot say anything, but this current account compulsorily we have to do certain adjustments for this current account balance. And finally, we show bank balance as per our cash book. Very, very important, students. Now, deposit account balance straight away we can take it to the opening balance sheet 2230. But whereas if you observe current account balance, they have shown only 300. Whereas here they said current account balance is 600. But this 600 is as per passbook. But we need as per cash book. That means we have to do certain adjustments. Wait for some time. When adjustment comes, I will explain. Next, bank interest. Bank interest. Bank interest is income for us. Income and expenditure account credit side. Bank interest 30 rupees. Means there is some adjustment. That adjustment we try to solve. Next one. Donations and subscriptions. Donation and subscriptions. If nothing is given about donations, but here they have mixed subscriptions, na, straight away take it to the income and expenditure account 2600. 2600. They have did some adjustment, I hope. Okay, what I will do is 2600 na. Okay, here I will write separately 2600 so that any adjustment is there, we do accordingly. Next, receipts from T's. It is income, so P&L, income and expenditure account credit. Receipts from T's 300. Here they shown 250 rupees. It may be expense. Wait for some time. Contribution to fairs. It is receipt, so credit side. Just a minute. Yeah. Here observe contribution to fairs. Actually, it is income, but what they did here, they deducted it from expenses. So net expense how much? 300. You can do one thing. Contribution to fair you can show as income on the credit side. Expenses you can show on the debit side. No problem. Next one. Sale of equipment. We sold equipment for 80 rupees. Amounts in thousands. Okay. Take it 80. What we have to do here? Prepare equipment account. Prepare equipment account roughly. You can prepare equipment account roughly and write down the sale proceeds on the credit side, because this is asset account, no? Equipment account credit side. Next, net proceeds of variety entertainment. Net proceeds of variety entertainment, it is revenue income, so that credit side of P&L, sorry, income and expenditure account 780. Next, donations for forthcoming tournament. Donations for forthcoming tournament. So these donations are specifically for tournament, so that these are taken to the balance sheet. These are taken to the balance sheet. Look at tournament fund donation 1000 rupees. Tournament fund donation 1000 rupees. Very, very important. Next one. With this, debit side items are completed. Now come to credit side items. Except 600 rupees, remaining every item is completed. Now come to credit side. Groundman's fee. It is revenue expense. Come to debit side here. Write down groundman's fee. Next one. 1500 moving machine. Moving machine is nothing but this is the machine which is used to clean the grounds. Okay. Right. This is asset. This is asset. Balance sheet asset side. Look at. Balance sheet asset side. Observe. Yeah. Machinery and equipment they have added. 1500 machinery. We see 250 rupees how they have added. Next. Rent of ground. Rent of ground is expense na. So P and income and expenditure account debit side. Rent of ground 250. Next. 400 fares. Contribution for fares na we have. So 400 is the total expense, but we received some donation 100 rupees contributions and the remaining amount is 300. Net amount we have incurred 300 rupees. Next, 280 printing and stationery. Printing and office expenses 280. Printing and office expenses 280. Write down here. We see how the difference is. Next, repairs to equipment 500. Repairs to equipment 500. Repairs. Here they have shown 460. Sir, 500 na sir. So why they are showing 460 sir? Wait for some time. I will explain. Next. Honorarium to Secretary and Treasurer 2021. It is relating to 2021 year. Means previous year. Previous year outstanding liability we have paid in the current year. Means this comes in opening balance sheet or opening balance sheet liabilities side. Honorarium 400. Honorarium 400. Clear? Next one. Next. Balance at bank as per passbook. Deposit account 3090. Deposit account 3090. Show it as it is on the asset side of balance sheet. Deposit 3090. And 150 rupees current account balance. Wait for some time, because we need to do certain adjustment. Cash in hand 250. Show it as it is 250 rupees cash in hand as an asset. Yes. Now come to the important adjustments. Here they have given April 1st 2021, March 31st 2022. April 1st 2021, March 31st 2022. Look at subscription due. How much subscription due? 150. This is shown first on the asset side of opening balance sheet. 150. And the same 150 rupees we receive in the current year na? Yes sir. Same 150 rupees we receive in the current year. Yes sir. Means that should be deducted. That should be deducted. 2600 subscriptions received. From that 150 rupees you deduct, because it is relating to previous year. Okay. Now what is the relating amount to the current year? 100. Means 2000. How much here we get? 2450 plus 100 rupees relating to current year na. So total amount 2550 subscription we show on the credit side of subscription account. That means income and expenditure account. And 100 rupees still receivable na. Balance sheet asset. 100 rupees still receivable. Next. Amount due for printing 100. Actually how much amount paid for printing? Amount paid for printing is 280. Observe carefully. Amount paid for printing is 280. Out of this, what is the expense relating to the previous year? 100. It is relating to previous year. How can we show in the current year? Ignore. So 180 rupees. And still receivable for the current year 80. So 180 plus 80, 260. 180 plus 80, 260. Total 260 rupees we show on the debit side of income and expenditure account. And what about outstanding amounts? Closing outstanding liability. Closing outstanding liability. Printing 80. And opening liability. Outstanding expenses. Here they have given outstanding expenses and honorarium. Outstanding expenses 100. 400 plus 100, 500 total. Clear? Next one. This one is very, very important, students. Checks unpresented being payment for repairs. You take BRS here. You take BRS here. We have balance as per passbook. We have balance as per passbook. How much? 600. Passbook balance how much we have? 600. If you observe, 300 rupees checks we have issued. 300 rupees checks we have issued, but not presented. But not presented. What we do? Checks issued but not presented. From passbook balance, what we do? We deduct na. Checks issued, cash book balance decrease, we deduct. Now, as per cash book, what is your bank balance? 300 rupees. The same 300 rupees originally we show here. Cash in current account 300. This is the logic. 600 rupees originally as per passbook we have. Checks issued but not presented, minus 300. Now what is bank balance as per your cash book? 300 sir. Here I have shown. Look at. Next one. Here checks issued but not presented sir. 260. Okay, wait. As per passbook how much is your balance? 260 sir. Checks issued na. Checks issued. Sorry, not 260. Just a minute. As per passbook, what is your balance? Tell me. As per passbook, what is your balance? 150. As per passbook, what is your balance? 150. Checks issued but not presented means 260 minus. Checks issued, cash book balance decrease. If you see bank balance as per cash book, it is negative. It is negative. Why? Because checks are not presented. Checks are not presented. So this 150 rupees negative balance we show as overdraft in the closing balance sheet, 120 bank overdraft. Is it clear, students? Next observe carefully. Here they have given repairs to equipment 500. Repairs to equipment 500. Okay. 500 rupees total amount paid. But out of this, already relating to previous year, how much? 300 rupees. Checks I have issued, but checks presented in the current financial year. Checks presented in the current financial year. 300 minus 500 minus 300. How much we get? 200 rupees. Still for 260 rupees. Still for 260 rupees, checks not presented. Means this also relating to current year 260. Total 460 rupees we consider as repairs to equipment. The same 460 they showed on the debit side of income and expenditure account. Very, very important. Next one. Next, estimated value of machinery and equipment. Opening machinery is how much? 800. Closing machinery is how much? 1750. 800 opening balance sheet asset. During the year we have purchased for 1500. Now total we should have 2300. During the year we have purchased a moving machine. Now 1500. So 2300 total. But how much amount they have shown? 1750. How much amount we have shown? 1750. Closing balance. Difference of 250 plus 300, 550 rupees. Depreciation. Depreciation. Look at 550. Yes or no? And we sold equipment now. We sold equipment now, and that is deducted. We sold equipment and that is deducted. Observe carefully. Is it clear, students? Yes. Now look at remaining amount 470 rupees. Is it clear? Right, sir. Next one. Next one. Interest not yet entered in the passbook. Interest not yet entered in the passbook. Okay, 20. But what we do? We consider it still receivable, na? Interest still receivable 20 rupees. Total 50 rupees. Next, bonus to groundmen outstanding. Still bonus is payable 300. Okay. This 300 is liability for us. Yes, 300 bonus to groundsman. Next one. That's it. For the year ended 31st March 2022, the honorarium to the secretary and treasurer are to be increased by total of 200. Already how much amount we have paid here? 400 rupees. Now this year we are increasing the amount. So total 600 is payable. Total 600 is payable. Look at honorarium, how much amount is payable? 600. Bonus to groundmen we have to show as expense also. And this 600 becomes current year liability. 600. Next. That's it. Prepare the income and expense account and balance sheet for the period ended 31st March 2022. This much of work we have to do. Clear, everybody? Right. Now look at the next problem. Illustration 9. Illustration 9. Observe carefully. Illustration 9. The Sport Writers Club gives the following receipts and payments account for the year ended 31st March 2022. What is this? Receipts and payments account. Opening balance, already I said, show it on the asset side of opening balance sheet. Subscriptions, take it to the credit side of income and expenditure account. Credit side of income and expenditure account. Subscription, working note. We have to do certain working note. Next one, miscellaneous income, take it to the income and expenditure account, credit side, 700. Next one, interest on fixed deposit, take it to the credit side of income and expenditure account, interest on fixed deposits, 2000. Over. Now credit side, salaries, take it to the income and expenditure account, debit side. Rent and electricity, income and expenditure account, debit. Library books, asset, students. Closing balance sheet, asset side. Magazines and newspapers, income and expenditure account, debit side. Magazines and newspapers, income and expenditure account, debit side. Next one, sundry expenses, income and expenditure account, debit side. Sports equipment, asset, balance sheet, asset side. Balance C by D. This is closing balance of cash and bank. This is closing balance of cash and bank. Show it on the asset side of closing balance sheet. Next, figures of other assets and liabilities are furnished as follows. Look at other assets and liabilities. Salaries outstanding 710 at the beginning of the year. Current 110, 170. What we have to do? Salaries 12,000 a total. 12,000 paid. Out of them 710 relating to previous year plus 110 relating to current year. Difference amount, you can calculate difference and show it on the debit side of income and expenditure account. Next, outstanding rent and electricity. Outstanding rent and electricity. Already paid how much? 7,220. Relating to previous year 864. Current year relating 973. Income and expenditure account. And what about this 710 and 170? 710 opening balance sheet, 170 closing balance sheet, 864 opening balance sheet, 973 closing balance sheet as liabilities. Outstanding for magazines and newspapers. Already paid how much? 2172. 2172 paid. Out of that 226 previous year. Current year 340. Difference amount income and expenditure account. 226 outstanding liability closing balance sheet, 340 outstanding liability, 226 opening balance sheet, 340 closing balance sheet. Next, fixed deposits 10% with bank. 20,000 asset, opening balance sheet asset, closing balance sheet is also asset. Since fixed deposits we have from the beginning of the year, total interest receivable 20,000 into 10%, 2,000 rupees interest receivable. 2,000. But look at how much interest received? 2,000. Okay. How much interest received? 2,000 plus how much interest receivable? Just a minute. Interest accrued thereon. Total interest received during the year 2000. Previous year receivable, opening balance sheet asset, deduct. Plus current year still receivable 500. Total becomes 2,000. And this 500 opening balance sheet asset, this 500 opening balance sheet liability. Next, subscription receivable. Already subscriptions received how much? Already subscriptions received 28,600. Still relating to previous year 1263. Relating to current year 1575. That's it. 1263 is shown in the opening balance sheet. 1575 shown on in the closing balance sheet asset side. And this whatever I am writing in the brackets, that is shown on the debit side of income and expenditure account. First one, second one, third one and fourth one. First, second, third. Fourth one, interest accrued and subscription, income and expenditure account credit side. Next, prepaid expenses. Look at the expenses here. Sundry expenses, how much paid? 10,278. Already outstanding relating to previous year 417 minus 417. Relating to current year 620. Difference amount income and expenditure account debit side. 417 and 620. 417 and 620. Shown on the liability side, asset side of balance sheet. 417 opening balance sheet, 620 closing balance sheet. Furniture 9,600 opening balance sheet. During the year furniture purchased, not purchased. Okay. On furniture we have to provide depreciation. Look at the closing values of furniture and sports equipment are to be determined after charging depreciation 10% and 20% per annum. Furniture 9,600 into 10%, 960. Income and expenditure account, depreciation on furniture 960. Remaining balance balance sheet. Next, sports equipment 7,200. If you observe, 7,200 sports equipment we have beginning of the year, and 1,000 sports equipment we have we have purchased during the year. Total sports equipment is 8,200. 8,200 into 20%, na? 8,200 into 20%, 1640 is the depreciation on equipment. From 8,200, 1640 deduct, show the remaining amount on the asset side of balance sheet. Next one, library books. Actually, library books, how much we have? 5,000. During the year, we have purchased library books for 1,000. So, 5,000 first opening balance sheet. 5,000 plus 1,000 That is equal to total 6,000 rupees we have to show on the asset side of closing balance sheet. But what they said, look at, if any during the club library books are revalued at the end of every year, and the value at the end of March was 5,250. Actually, library books we should have 6,000 now, but how much we have? 5,250. What about 750? Depreciation, and this depreciation is nothing but 750 over. This is opening balance sheet. Balance the opening balance sheet. We can calculate capital fund. This is taken to the closing balance sheet. Capital fund 47,000. Now balance income and expenditure account. We get either surplus or deficit. Either surplus or deficit. In this problem we have deficit. Excess of expenditure over income. This is deducted from capital fund. After that, show one by one asset. Now balance. You get the same total total assets, total liabilities. Now working notes, observe. Here whatever we have done, all these things they have done as a working note. Look at this working note. That's it. Now look at illustration 10. Observe illustration 10. This is another important problem. First one, the income and expenditure account of youth club. The income and expenditure account of youth club for the year 2022 is as follows. Look at one by one. This is income and expenditure account. From this income and expenditure account, which account we have to prepare? Receipts and payments account and balance sheet. Observe, second type of problem. Prepare receipts and payments account for 22 and balance sheet at the year end. Here whatever the previously whatever the approach we have followed, now simply this is quite opposite. Sir, what is that quite opposite, sir? Income and expenditure account, debit side, what we write? Expenses relating to current year. That too paid, payable. Paid plus payable. Here it is, on the credit side of income and expenditure account we write income relating to current year only, income received or income receivable. Income received and income receivable. Observe carefully. But when we are preparing receipts and payments account now, what we need? We need only paid and received. Paid means expense actually paid. Income means income actually received. Expense may be paid relating to current year or previous year, or sometimes it may be prepaid expense also. Incomes received may be relating to current year or previous year or next years also. So by taking the expenses paid and incomes received from income and expenditure account, we have to do certain adjustments. And from additional information, we have to identify what is capital receipts and what are capital payments. Because capital receipts information, capital payments information, income and expenditure account does not disclose. Is it clear, students? That's why we have to identify capital receipts and capital payments from additional information. By taking capital receipts and capital payments from additional information, we prepare this receipts and payments account. It is quite interesting. Incomplete records problem, NPO problem, these are quite interesting. Now look at how do we solve that. Observe illustration 10. Here identify, see here all expenses are revenue expense, all incomes are revenue incomes. Is it clear? Now look at salaries. This is expenditure na. All the expenses we have to take it to the receipts and payments account credit side. And in the income and expenditure account, we show cash expenses plus non-cash expenses. I repeat, in income and expenditure account, we show cash expenses, non-cash expenses also. Cash expenses and non-cash expenses. Yes sir, no students? Yes sir. Now salaries, cash expense. General expenses, cash expense. Audit fee, cash expense. Secretary honorarium. All these items straight away take it to the credit side of income and expenditure account. If any item requires adjustment, then we do accordingly. Otherwise, straight away the same amount is written on the credit side of receipts and payments account, or payments side of receipts and payments account. Stationery and printing, annual dinner expenses, interest and bank charges, depreciation. Yes, it is non-cash expense. It is not taken non-cash expense. It is not taken to the income receipts and payments account. It is taken to the concerned asset account. If you are preparing any asset account, this depreciation we take. Surplus. Surplus is not taken to the receipts and payments account. Surplus is added to the capital fund in the balance sheet. This is the care you have to take. Next, by subscription. Subscription received na receipts and payments account debit side. Entrance fees received na receipts and payments account debit side. Contribution for annual dinner, receipt. Annual sports meet, receipts, receipt. All these are receipts. By taking these amounts, we do certain adjustments from other information. Look at the other information. This account had been prepared after the following adjustments. How this income and expenditure account is prepared after following these adjustments? Look at subscriptions outstanding at the end 2021, previous year. Just a minute. Yeah, 2022 na. Yes, current year 2022. This is previous year subscription outstanding. Subscription received in advance on 450. Subscription received in advance on 31st December 2022, 270. Subscription outstanding on 31st December 2022, 750. By using this information, we prepare subscription account first. Subscription account first. Look at how subscription account looks like. Okay, I will prepare subscription account, just you can observe. Subscription account. Look at, already they have given subscription in the income and expenditure account. How much? 7,500 to income and expenditure account, 7,500. Okay, now they are saying at the end of 2021 it is outstanding. So what is the entry we have been passed in the last year? Subscription receivable account debit to subscription account. This becomes reverse in the current year. So how can we write? To subscription account debit to outstanding subscription 2021, 600. Next one, previous year we have received in advance 450. Previous year we have received in advance. What is the entry we have been recorded? Subscription account debit to subscription received in advance. Now this becomes reverse. Means in the subscriptions account we write credit side by subscriptions received in advance. How much? 450. Over. Next, subscriptions received in advance on 31st December 2022. Current year, what is the adjustment entry we record? Subscriptions received, subscriptions account debit to subscriptions received in advance. So here we write to subscriptions received in advance. How much? 270. That's it. Next, subscriptions still outstanding in the current year, 750. For this, what is the entry we record? Subscriptions receivable account debit to subscriptions account. So by subscriptions receivable 750. Hope you are following. Yes sir. Now balance this account. 600 plus 7,500 plus 270, 8,370 minus 450 minus 750. How much here we are getting? 7,770. It is nothing but by bank or receipts and payments account. This is the actual amount of subscription we received during the year, and this is taken to the income and expenditure account credit side. Observe carefully. Yes. Here they have done total debit side. Finally, how much amount they have found? 7,170. Clear, students? Next one. Salaries outstanding at the beginning and at the end of the year respectively 400 and 450. But here they have given salaries paid 4,750. Okay. But beginning how much salaries we have to pay? 400. Means current year they reduced na. Current year when they are showing it on the debit side of income and expenditure account, they reduce 400. So now we add back 400 rupees because we want to know how much of salaries actually paid. This 450 relating to previous year at the time of preparation of just a minute, at the time of preparation of income and expenditure account, this 400 is deducted. Now we add back. And at the end of the year, how much is outstanding? 450. At the time of preparation of income and expenditure account, this 450 is added. This 450 is added. This 450 is added in the income and expenditure account. Now what we have to do? We have to deduct. We have to deduct 450. That's it. 4,700 is the remaining amount. Next one. General expenses include insurance prepaid to the extent of 60. General expenses include insurance prepaid to the extent of 60. How much general expenses paid? 500. This includes prepaid insurance na 60 minus. Sorry, earlier they have reduced this 60. Now we add back. Total how much we get? 560. And this 60 rupees prepaid insurance, again we show it on the asset side of balance sheet. Next one. Audit fee for 2022 is as at unpaid. Audit fee is not paid, but in the income and expenditure account they said audit fees is paid but not paid na. So this is not taken to the receipts and payments account. During 2022, audit fee for 2021 was paid amounting to 200. Here whatever the audit fees paid, it is relating to current year, but they said 2021 audit fees is paid 200. It comes in receipts and payments account. It comes in receipts and payments account. Observe carefully. Next one. The club owned a freehold lease of ground valued at 10,000. The club owned a freehold lease of ground valued at 10,000. Okay. The club had sports equipment on 1st January opening na. So freehold lease, opening balance sheet asset, closing balance sheet also asset. Next, the club had sports equipment, opening balance sheet asset 2,600, closing balance sheet also asset. But observe, did we purchase any sports equipment? No, not yet. Okay, fine. Next one. At the end of the year, after depreciation, the equipment amounted to 2,700. Means here if you prepare sports equipment account, debit side opening balance we have 2,700, closing balance we have 2,700, 2,600 debit, 2,700 credit. During the year we have provided depreciation 300. Depreciation is written on the credit side. Means total credit 3,000. Total debit 2,600, debit side 400 rupees, they are showing less amount. It is treated as purchase of sports equipment. Purchase of sports equipment 400. So it is a payment for us. It is a payment for us. Purchase of sports equipment. Look at sports equipment purchased 400. This is how we have to see one by one item. This is how we have to see one by one item. Is it clear, students? Next one. The club has raised a bank loan of 2,000 in 2021. In 2021, the club has raised a bank loan of 2,000. Means 2021, if you prepare 2021 balance sheet, this becomes liability. Now check whether this liability is paid or not. If it is not paid, na, closing balance sheet also this liability comes. If it is paid, then it comes in receipts and payments account credit side, bank loan repaid. This was outstanding throughout 2022, means loan not repaid. This comes in closing balance sheet also. This comes in closing balance sheet also. And 31st December 2022, cash in hand amounted to 1600. 31st December 2022, closing. So closing cash is how much? 1600. Go to closing balance sheet and show it here. 1600. Now if you prepare receipts and payments account, but in the entire problem, they did not give any opening balance of cash. They did not give any opening balance of cash. Now if you balance this receipts and payments account, whatever the balance you get, that becomes opening balance. And this opening balance, we take it to the opening balance sheet. This opening balance, we take it to the opening balance sheet. There we find capital fund. That capital fund is taken to the closing balance sheet. Now the closing balance sheet gets closed. That is total. This is how we solve this type of problem. Next. Yeah. Next, look at, we try to solve. Educational institution is a biggest, very big problem, students. If you get this type of problem, it is better to take it as choice. Why? Because it is time consuming. Sometimes earlier, before 2024 June attempt, they might give you NPO problem for 20 marks. NPO problem alone for 20 marks. In that case, that very lengthy problem. Very lengthy problem. In that case, it is better choice to take this problem as choice. It is better to take this problem as choice. Okay. And now we try to see RTP ones. Let us check RTP ones. Which type of problem they have given? Look at RTP. See, financial statements of not-for-profit organizations. From the following receipts and payments account of finance professionals club. Receipts and payments account they have given. Here what we have to do? Opening balance, take it to the opening balance sheet. Closing balance, take it to the closing balance sheet. Receipt side, identify whether it is capital receipt or revenue receipt. Payment side, identify whether it is capital payment or revenue payment. That's it. Look at cash in hand, cash at bank. Both are taken to the credit side of, asset side of opening balance sheet. Next, closing balances are taken to the closing balance sheet. Next, one by one, look at subscription. Subscription is revenue receipt. Take it to the income and expenditure account credit side. Take it to the income and expenditure account credit side. 22,86,000. Next, what is the next item? Donations. Donations, here they have given 10 lakhs 80,000. Look at the information about donations. Nothing is specified. Nothing is specified about donations. Now, look at here. Here nothing is specified about donations. But if you observe, the amount is very big. That's why they have taken 10 lakhs 80,000 to the closing balance sheet. They have taken 10 lakh 80,000 to the closing balance sheet. Observe carefully. Where is the closing balance sheet? Okay, what is the requirement of the answer? Question. Income and expenditure account for the year ended 31st March 2024. As per the club rules, donations are to be capitalized and entrance fees is the income of club. They said donations are capitalized, means these donations are taken in the balance sheet. But entrance fees is income of the club, means we have to show on the credit side of income and expenditure account. Fine. That's why donations are ignored. Next, interest on investments. Income and expenditure account credit. Entrance fees. Entrance fees, just now they said it is treated as income of the business. It is treated as income of the business. So that income and expenditure account credit side. Entrance fees is shown on the credit side of income and expenditure account. Next, interest received from bank. Credit side of income and expenditure account. Credit side of income and expenditure account. Next, sale of old newspapers. Credit side of income and expenditure account as revenue receipt. Now look at salaries. Salaries 7,42,500. Salaries 7,42,500. Take it to the debit side of income and expenditure account. Stationery, debit to the income and expenditure account. Billiard table. Billiard table is nothing but asset for us. Billiard table is asset for us. It's a sports club, na? It's a professionals club. So there we have billiard table. So it's a game, na? You can see snooker type of game, right? Billiard table. So 8,70,750. It is asset. Go to balance sheet, asset side, show it on the asset side of balance sheet. Investments, asset side of balance sheet. Miscellaneous expenses, income and expenditure account debit. Furniture, asset side of balance sheet. Insurance premium, income and expenditure account debit. Cash in hand, cash at bank, over. Now look at subscription in arrears for the year ended 31st March 2024. 31st March 2024, beginning or closing? It is 31st March 2024, closing only. Closing only. Still receivable how much? 2,02,500. And subscriptions received in advance during the year 58,500. Means how do we do accounting for this? Simple. How much subscription total? 22 lakh 86,000. Still receivable how much? Still receivable 2,02,500. 2,02,500 minus received in advance 58,000. Deduct and finally whatever the amount we get, this is shown on the credit side of income and expenditure account. Observe. Subscription 22,86,000 plus 2,02,500 minus 58,500. Next one. Insurance premium prepaid 4,500. They have given insurance premium paid how much? 40,500. Out of that 4,500 is prepaid. So 5,600 is considered as current year amount and 4,500 is deducted. Look at insurance. 40,500 minus 4,500. And this 4,000 rupees is shown on the asset side of balance sheet. Next. The details with respect to stationery of accountants club is as follows. Look at stock of stationery, opening balance 7,500, closing balance 45,000. Opening balance 7,500. This is very, very important, students. The total information is relating to how much of stock of stationery consumed. I repeat, how much of stock of stationery consumed during the year. We need to calculate by using this information. Observe here, opening stock is 7,500, closing stock is 45,000. We have to prepare some working note. Look at stationery account. Opening balance 7,200, closing balance 45,000. At the same time, they have given creditors for stationery 3960. So here also prepare creditors account. Opening balance 39,000 credit, closing balance 60,000 debit. And also they have given here advance paid to for stationery purchased during the year. We have paid some advance amount. Advance amount is deducted. Look at some advance amount we have paid. Advance paid for stationery purchased 10,500. Clear? Now look at. Observe carefully. From these two accounts, creditors for stationery and stock of stationery, now we calculate how much stock of stationery consumed. If you observe the receipts and payments account, they said amount paid for stationery 1,34,550. Entry creditors account debit to bank account. So 1,34,550. Automatically, if you balance the account, look at 1,34,550 plus 60,000. 1,34,550 plus 60,000. Total becomes a, sorry, just a minute. 1,34,550 plus 60,000. Total becomes 1,94,550 minus debit 39,000 minus advance 10,500. Total 1,45,050 rupees worth of stock of stationery we have purchased on credit. What is the entry we record? Purchases account debit to supplier account. Go to purchase of stock account, stock of stationery, debit 145.50. 145.50. Now look at this much of stock we should have. 7,500 plus 145.50, total 152,550. This much of stock we should have. But closing balance, how much we have? 45,000. Closing balance, how much we have? 45,000. Difference nothing but what? How much? 150 to 550 minus 45,000. This becomes 1,07,550 worth of stock of stationery we consumed. This is taken to the income and expenditure account debit side. 1,07,550. Observe carefully. Next, in this entire problem, this concept is very important. That's it. Over. Clear? Now you can balance this income and expenditure account, and it is surplus over expenditure. Surplus, excess of income over expenditure. And this working note is very, very important. Now observe. MTP1. MTP1, observe. Yes. NPO problem they have given. Following is the receipts and payments account. I think this is similar to I think this type of problem we have discussed. Just a minute. Okay, we see, no problem at all. Yes, look at. Following is the receipts and payments account. Following is the receipts and payments account of Messrs Rainbow Club for the year ended 31st March 2025. Look at, now we have to prepare what? Income and expenditure account only. No need to prepare balance sheet. It is given for 5 marks. So you have to complete this problem within 8 to 9 minutes. Okay, now look at one by one. Cash in hand not taken to income and expenditure account. Closing balance not taken to income and expenditure account. Subscription 67,500. Take it to the income and expenditure account. Take it to the income and expenditure account. Yes. Look at Messrs Rainbow Club. By subscription, they have given 70,500. Look at subscription adjustment. Subscription received how much? 67,500. Look at the adjustments for this. 750 relating to previous year minus 3,000 relating to current year plus subscription received in advance. Last year we received, na, it is relating to current year plus 1,500 received in advance relating to next year minus. After doing all the adjustments, finally we are getting 70,500. This 70,500 is credit. Is it clear? Next one. Donation 6,750. Look at what is any information given regarding to donation. Nothing is given. So that take it to the credit side of income and expenditure account. Next. Interest on investment at 6% for the year 4,500. Check how much of investments we have first of all. Nothing is given. Nothing is given. Means straight away take 4,200 as income. Straight away 4,300 as income. Over. Next one. Fashion show proceeds. Income. 75,750. They have directed expenses. You can do one thing. All incomes are shown 75,750 and expenses you can show it on the debit side 51,000. Next one. Payments for cosmetics. Wait for some time. Next, honorarium to beautician 12,000. Honorarium to beautician 12,000 expense debit. Next one. Salaries expense debit 27,000. Next, sundry expenses expense debit 1,500. Next one, rent for building 18,000 debit. Next one, fashion show expenses 51,000. It is deducted from fashion show receipts. So net receipts how much? 24,750 net income. Next, they have given additional information. Look at stock of cosmetics and amount due to cosmetics. Same, just now we have prepared stock of stationery. Na? Same manner we have to prepare stock of cosmetics and amount due to cosmetics as working notes. Look at working notes. Cosmetics consumed account. Opening balance 15, closing balance 10,500. Creditors opening balance and closing balance. During the year, how much amount paid? 22,500. It is given in the receipts and payments account now. Yes, sir. So that how what you can calculate purchases during the year, and this 27,000 take it to the cosmetics consumed account. Balance this cosmetics consumed account, and finally we can get how much of cosmetics consumed, 31,500. This concept is very very important, students. And this 31,500 is taken to the debit side of income and expenditure account. Finally, balance we got excess of income over expenditure. This is very simple problem. It may be given for 5 marks. Okay. Next, come to MTP2. MTP2 observe. Just a minute. MTP2 observe. Which type of problem they have given in MTP2? Yes. See, they have given receipts and payments account, and they are asking us to prepare income and expenditure account and the balance sheet. Income and expenditure account and the balance sheet. They have given it for 8 marks. Look at one by one. Already this type of problem we have not covered. Okay. So in this problem, if you observe, they have given opening balance of capital fund, so that you need not to prepare opening balance sheet. Yes or no, students? Yes, sir. Yes, sir. You need not to prepare opening balance sheet. Now look at one by one item. First, you draw income and expenditure account and balance sheet. First, you draw income and expenditure account and balance sheet. Then after, take one by one item. Subscriptions received 12,50,000. Subscriptions received 12,50,000. So credit to, and we have some adjustments. Look at this is previous year now. Previous year subscription minus straight away. Current year subscription add straight away. That's it. Subscription received in advance. Previous year we have received subscriptions in advance relating to current year. What is current year? 24-25 means add. And during the year we received subscriptions relating to next year minus over. After doing all these adjustments, whatever the amount you get, show it on the credit side of income and expenditure account. And what about this 37,500? You need not to prepare opening capital fund na, so that you need not to show 1/4/2024 assets and liabilities in any balance sheet, opening balance sheet. No, nothing. So straight away this 55,000 rupees, take it to the asset side of balance sheet, closing balance sheet, and 17,500 liability side of closing balance sheet. Over. This is the information relating to subscription received. Next, donations raised for meeting revenue expenditure. Straight away take it to the credit side of income and expenditure account. Credit side of income and expenditure account. Observe. Yes. Donations 3,75,000. Next, interest on investments 9% per annum. We have received investments 9% per annum, 2,25,000. But observe how much of investments we have. How much of investments we have? Nothing is given relating to investments. Look at the additional information. Any investment information is given? No, sir. Subscription over. Stock, amount, value of equipment, building, nothing. They didn't give any investments opening balance. Then you people tell me, how can you get 9% interest on investments unless you have investments? Means here indirectly they are asking us, you calculate investments. Yes, sir. We have received 9% interest for 2,25,000. Make it 100%. 2,25,000 divided by 9%, 25 lakhs. Unless you have excuse me, unless you have 25 lakhs worth of investments, how can you get 9% interest? So 25 lakhs investments we have to show as an asset. As an asset, very very important here. Implied adjustment. Is it clear? Next one. Next one, charity show collection, income na credit side. Credit side, you can deduct expenses and charity show total received 3,12,500. You can deduct expenses, or else 3,12,500 straight away show it on the credit side and 37,500 show it on the debit side. Next, now come to credit side. Payment for medicine. Yes, just now we have discussed one adjustment. Cosmetics consumed. Previously we have discussed stock of stationery. Now here they are asking stock of medicine. Same treatment, students. Same treatment. Here you can see there are two things interrelated. Now here you have to prepare stock of medicine account and amount due to medicine supply account. Okay. Now look at, prepare those two accounts first. Medicines purchased during the year. Medicines purchased during the year. Medicines consumed during the year. Here they have given statement wise. You can prepare account wise. Here they have given statement wise, but you can prepare account wise, no problem. Right. Now look at. So how do we prepare account wise, sir? Simple. The same information we are presenting in account wise. Observe. What is the opening balance? Due 2,25,000. Liability na credit. What is closing balance? 3,25,000. Okay. Stock of medicine. Medicine opening balance. Yes, sir. 2.5 lakh. Medicine closing balance. 3,75,000, sir. During the year, how much amount we paid for medicine? 7.5 lakh, sir. That is taken to the debit side of this account. Now balance. Now balance and tell me. 7.5 lakh plus 325 minus 225. We got 8.5 lakh. This much worth of medicines we have purchased. Take it to the stock of medicine account, 8.5 lakh. So total stock of medicine we should have 11 lakhs. But whereas we have 3,75,000. So how much stock of medicine consumed? 11 lakh minus 375. So we have 7,25,000. 7,25,000 worth of stock of medicine we have consumed. Take it to the debit side of income and expenditure account. 7,25,000. Next one. Next, honorarium to doctors, 2.5 lakh. Look at any adjustment for honorarium, nothing. So that take it straight away to the debit side of income and expenditure account. Next one, sundry expenses. Any adjustments for sundry expenses? Nothing. So straight away take it to the income and expenditure account to debit side. Next one, equipment purchased. Yes, already here how much equipment we have? 5,25,000. 5,25,000 worth of equipment we have. Okay, 5,25,000. During the year we purchased for 3,75,000. Total equipment we should have 9 lakhs. Total equipment we should have 9 lakhs. But whereas we have equipment of 7.5 lakh. What about remaining 1.5 lakh? Depreciation on equipment. Depreciation on equipment. Observe carefully. 1.5 lakh depreciation on equipment. Important adjustment. Next one, charity show expenses. Already here we have deducted. Over. Now come to additional information. Subscription over. Stock of medicine over. Amount due for medicine over. Value of equipment over. Now look at building. At the beginning of the year we have building worth of 12 lakhs. But at the end, when it comes to at the end, 12 lakhs. 12 lakh 50, 12 lakhs. 50,000 difference. 50,000 difference. This 50,000 becomes depreciation. Next one. Cash balance, opening given, closing given. You need not to prepare any opening balance sheet. Straight away go to closing balance sheet and show 2,25,000 rupees on the asset side. Now opening capital fund already given. Take it to the closing balance sheet liability side. 45,07,000 over. Your balance sheet also completed. Very simple problem. If you get this type of problem now, very easy. But only thing you need to understand is what is a procedure? What is step by step procedure to be followed? Here we have taken one by one item. If you start from item 1, if you end up with last item, you get correct answer. Because you are not missing even single amount. So that you get correct amount. Is it clear? This is our MTP 2 students. MTP 2. This is our total not for profit organization chapter, right? Now, today I am ending the session. Tomorrow morning we start freshly partnership accounts. Partnership accounts. Actually, I thought to take till 11 o'clock, but tomorrow freshly we start partnership accounts. Now, you people do one thing. Till now, whatever we have discussed, final accounts of sole proprietor, accounts from incomplete records, and not for profit organization. These three chapters you prepare well today and tomorrow morning before 9 o'clock. You prepare well so that you get some confidence. Okay, I can score 20 to 25 marks from these three chapters. 20 to 25 marks from these three chapters. Suppose if they have given for 25 marks, if you attempt, at least you are in a position to score 20 marks at least. 20 marks at least. Is it clear, students? So do prepare, and if you have any doubts, you can send it to my personal number, that is 9573778943. You can send to this number WhatsApp or Telegram. Telegram is preferable. You can send your queries to this number Telegram. Is it clear, students? So I will try to respond as early as possible. Is it clear? That's it, students. Good night, and do prepare these three chapters. You have to complete these three chapters by tomorrow morning. Tomorrow morning we start partnership accounts and company accounts. Is it clear? Yes. That's it. We meet again in the next class. Till then, bye bye everyone. Good night.